Margin's calling, but I ain't answering. Alarm goes off, I don't snooze that shit. Phone already buzzing, future's lit. Didn't shower, still smell like smoke, but they can't look good, so I let it roll. They said sell early, lock it in. I said nah with a grin and another 10. Stop loss loose, risk tolerance gone. I ain't lucky, I'm just dead ass wrong till I'm not. Everybody's smart when it's sideways flat, but I size up big when it snaps like that. If this goes south, I'm fucked, I know, but it won't. I'm all in drunk on a green ass screen, levered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. But it plays safe, still broke somehow. I play stupid and I'm eating now. Same boots, same bar, bigger tab. Screenshot wins, never posted bags. X said you still gambling stocks, yeah, and rent still pays, so it's working now. High risk, stress, broke, or smiling wide. I don't need faith when momentum's high. I don't manifest, I don't wish or pray. I read the tape and I press buy. If this thing cracks, I'll deal with it then, but it won't. Drunk on a green ass screen, levered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. Show the nights you almost puke, mouth shaking thinking what I do. Conviction ain't calm, it's loud and mean, and I still hit by when it felt obscene. Still did. I'm all in drunk on a green ass screen, revered up like I'm 23. If it rips, I'm a problem tonight. If it dips, I just double my size. No plan B, just balls and charts. Playing chicken with my own damn heart. Say it's dumb, say I'm out of my mind. I'm all in drunk on a green ass line. They call it reckless, I call it Tuesday. If you want, I can.
Oh, brother, oh, brother, oh, brother. Good morning, good morning, good morning. We're back at it again, Daniel. It is a unemployment day. We're about to get those job numbers. It's coming out in about 5-ish minutes. We're going to find out. We're about to find out, team. Is the market going to keep ripping? Or are we about to take a pretty sharp U-turn and go down and down and down? Folks, I'm so happy to be here. Good morning, good morning, good morning. We're up before the farmers. We're up before the crack of dawn, but we are not up before the Verizon Fios helpline, which I was just speaking with for the past 30 minutes of my life to get my new internet figured out. Did I tell you guys that I'm moving? I don't know if I told you guys this. I know I told the Discord. I know I told my mom because I'm moving back into my mom's basement, but I don't know if I told you guys. Yeah, so I'm trying to figure out my new internet, and Verizon Fios likes to do this game where they're like, yeah, we know you paid for this service, but we don't know if we're ever going to be able to install it because we need an engineering team. Then we need a technician who's on vacation in Haiti, and then he's going backpacking through Nepal, and his name's Jeff, and he's the only guy who can install your internet, but then the engineering hasn't heard from him, and we know you paid for it, but we're hoping to install your internet in like 3 to 4 business quarters. So I'm in the middle of trying to figure that one out. But regardless, we're going back to that basement style life. I feel like I've flown a little too close to the sun. I feel as if I've enjoyed too much of the positive aspects of life, of having sunlight and having a nice place. And I think it's time for your boy to return to his roots, those deep cellar-based roots, and really get back to what started this whole thing. So, what's today? Today is Wednesday. So enjoy Wednesday, Thursday, and Friday. We have 3 days. Count them down. You have 3 more live shows to enjoy this background, this area, everything you see, because from here on out, it is changing. It is changing. So that's something that I'm figuring out in my life that doesn't necessarily impact you, but I just like to share the highs and the lows of my life because we've developed a parasocial relationship, which, hey, I am all in on. Speaking of parasocial relationships, a lot of you yesterday yelled at me for having bags under my eyes. Matt, you look like shit. Matt, you sound like shit. Matt, you trade like shit. And I guess sounding like shit and trading like shit is probably something I'm not going to be able to improve. But I did switch the lighting. So instead of it being above me and casting shadows, because I have these big ass brows making my bags look worse, I lowered them. And actually, according to ChatGPT, they're still not at the right angle. I have them like this, like pow, pow, pow. And then there's one over here as well. So I don't know. I'm always going to sound like shit and trade like shit. But in terms of looking like shit, we might be able to fix it up. So that's where we're at. We're going to do a lot of fun stuff today because I'm in one of those moods. Of course, we're going to be turning it over to the Cats Rule the Earth tarot card. So we're going to be asking the market gods what their plans are. But before we do that, I do want to switch it up to this because we're about to get the unemployment report. Stock futures tick higher as traders await delayed January jobs report. Bitcoin bounce fades as it drops back down to just under 67,000. Delayed January jobs report will be released Wednesday. Here's what to expect. What you should expect is right here. Unemployment report expectation 4.4% for the unemployment rate. Non-farm payrolls 66,000. Those are the lines in the sand. And just so you know, later on today, 1 p.m. Eastern, we are getting the 10-year note auction, which is kind of interesting. U.S. 10-year yield touches 5-week low before this data drop that we're about to get. So I guess as we get rocking here, let me make sure I have this all exactly where I want it. Okay, so we did that. We're going to be able to track this. You know what? I did a little bit of scalp trades before just to get in my trading days on those. So that's what that's about. But let's get over to the 100 tick and see how crazy this is actually getting. All right, please, in chat, blow up the chat. Are you bullish? Are you bearish? Are you somewhere in between? Let me know. Let me know. Let me know. Let's do this. We are rocking. We have some volume. Ideally, our boy Rick Santilli's going to be ripping it and ripping it real soon. So we haven't heard from our boy Rick in a minute. I guess I'm fiending for some Rick because what's a trading day without Rick? So hopefully he's chit-chatting soon. We are about 10 seconds out, which means it is time to vote. Vote. Are you bullish? Are you bearish? Are you somewhere in between? What is it about to be? Get ready. Get ready.
Scores on the doors. Dow implied to open higher 85.
Green.
S&P 12. The Treasuries, the last check on the 10-year was right around 412, 4 1/8. Can we call it that? Rick Santelli is standing by. Wait, we won't go to him, Rick. You know what? Let's take a quick look across the Treasury complex.
Buckle up, Buttercup. It's going to be a good day. We got saved again. We got saved again, folks. Put on your protective eyewear. We're going. We're fucking ripping it today. There's our boy Rick. I lost all volume.
Kelly, yes, it's Jobs Wednesday. Not necessarily a Friday, but every bit as important.
Rip off, ripping
January,
it. Now it's time to hold.
Twice expectations at 130,000.
Now it's time to hold.
130K.
Look at that
That
pop.
would be
Look at
the
that pop.
juiciest. Going back to April of last year when it was 158.
Hell yeah.
Now, if we look at a couple of months worth
Get
of
your
revision,
coffee.
they came in at
Rick's in
minus
chat.
17,000.
If you're not yelling Rick's in chat right now, banned forever.
Earnings month over month up 0.4. That's 1/10 higher than both looking back and looking forward. 0.4 would equal October last year.
Rick.
You are all the way back
Give it to us,
the
Rick.
summer of 24 to find a higher month-over-month
Can't
earnings
have
number.
bags
Let's go
under your
year
eyes
over
when you
year.
have on your protective
3.7
eyewear.
exactly as expected. 1/10 light to 3.8 in the rear
not
view mirror.
comfortable today.
So how does that stack up? 3.7
Gold
would
getting
be the
crushed.
lightest since it was actually 3.6 Thanksgiving
Dollar
of last
ripping.
year. Now let's look at hours worked.
Yields
shall we?
ripping.
34.3.
Bonds
that
dropping.
increase, that's a
Woo,
good thing.
buddy.
That's up 1/10 from both what we were expecting and our last look.
Gold
34.3
smashed,
would equal
silver
November
smashed,
to find a higher one.
equities
all the way back to
ripping.
March of
We're back, boys.
24. Now the
We're
unemployment
back,
rate,
boys.
maybe the most important number of all, and it moves down 1/10, 4.3%. All the naysayers out there, they're going to like this set of data points. 4.3 would be equal to where we were
buddy.
in August of last year. To find a lower number, you're looking at June of last year. Labor force participation moved up as well. More
Look
good
at that.
news.
There she goes,
62.5.
folks.
That would be the best since
She's
it
a
was
Butte Clark.
62.6
She's a
in
Butte
April
Clark.
of last year. And drumroll, please, the final number I'm going to give you is U6, the underemployment rate.
the
and
Russell.
it comes in at
You dirty,
8%.
dirty dog.
8%.
The small
Last
cap
look
is
was
loving this.
8% would be the best going all the way back to July when it was 7.9. Now, for the bad news, but expected bad news, we're looking at benchmark revisions from April of 24 to March of 25. The original number that we were looking at was around minus 900,000, comes in at minus 862,000. So the benchmark revisions are a little less than expected, but some were actually thinking it'll be in the 700,000 camp. So that comes into minus 862. What are yields doing? Zoom, zoom, zoom is what yields are doing. We moved from 12, which was down 3 on a 10-year, to 419. That makes sense. A 2-year, really screaming. From 345 all the way up to 353. Why? Because these are solid data points. And one more thing I'd like to point out. I am
Can I get a golly?
I think seasonal adjustments
We're going to get a little
are
golly
dead on
train going in
arrival
here.
on most numbers. Yesterday's retail sales looked flat. I brought it out at 8:30. But if you look at non-seasonally adjusted, it was the strongest December on record at $818 billion.
Look at that pump fest.
Kelly, Sully.
Look at that
back
pump
to you.
fest.
Everybody, Rick,
Pumping.
thank you very much. And again, focus on the market reaction here. Futures are moving positive, even with that big move higher in Treasury yields.
Oh,
that
look
Rick was
at
just
that
discussing.
dollar.
Dow would open higher 200 points. This, guys, could become the day where we find out if good news is good news or if we have to flip the script
That's a
and
fair
say
point.
good news is bad news because Treasury yields are going up, Fed cuts are less likely, Mag 7 trade becomes a real focus.
Unemployment
I
dropping.
hear something. Do you know what that is? Steve, you hear that? Steve Leisman? I think that's the sound of rate cut expectations dying.
And yet,
what is that
look at
noise?
futures.
If a rate cut fell in the forest and nobody was there to hear it, would it actually? Quickly, government down another 42,000, the federal side minus 34. We kind of thought we were done with that.
Trying to find the
expecting some
odds of
stuff
the
up.
rate cut
I'll
right
start
here.
there. I will say an extra 100,000 downward or upward adjustment because of seasonals in terms of the NSA and the SA. So my concern ahead of this number, that part of this strength could be on the seasonal side. You did see a big pop, for example, in general merchandise stores that was up 18 or 19,000, and the big job growth coming 123,000 in healthcare and social assistance, with healthcare being 81, 82,000.
Yeah, we got movement on the rate cut.
So I don't know if there's a seasonal issue
Jeez.
there. But that's where the strength has been in the
But
economy.
it's corroborated by the household. I mean, when the unemployment rate
Look
goes to
at that.
4.3 now, right? So
SPY ripping,
I mean,
Qs
don't you
ripping,
agree?
Russell
Sometimes we
ripping,
get a tale of two
dollar
surveys, right?
ripping.
Both of them
I
are
don't
pretty
ever
positive.
think
Silver
they don't-
getting crushed.
Over a year they
Gold
work together.
getting
I don't
crushed.
Look at the month-to-month being corroborated.
Bonds
I see what you're
getting
saying.
crushed.
That's not a crazy idea, but I don't like to do that
What
on
a
a
day.
month-to-month basis.
But
What
good
a
trend.
day
Look,
to be
4.5
us.
in November,
What a day to
4.40
be
in
us,
December,
Steve.
4.30 in Jan. I mean, that
Well,
looks
would
like
you
a
look
trend.
at that?
It does, but
Would
you
you
remember
look
you had
at
the downward
that?
revisions November, December into the 40s. That seems to me like more the accurate run rate. I would not expect at this moment.
SPX
you're gonna
popping
keep doing
25
these kind of
points
numbers
right
on
into the-
healthcare,
dude,
that
we
these
might be
numbers
seeing
would
that
crank up.
all-time
One
high
good piece
today.
Of news, you did have a turnaround in
All that
manufacturing.
positive gamma
that was
up here.
5,000. It has been
It's going to be a day.
perennial.
It might
That
even
actually,
be a
Steve,
day
is
and a
important
half,
one.
folks.
Since
Yeah.
the last April, haven't we been shedding
It might even
manufacturing
be a
jobs?
day and a
job. This
half.
was
To see some hiring there.
It's been up and down. It's not a big number. I was trying to think of construction. I think was also higher as well. Where's that construction number? That's up 33,000. So that's a good number. In that specialty trade contractors, which could be government work, and I don't know if that also picks up the data center construction that's been out there. So again, just be clear, I would take this with a bit of a grain of salt. Rick is right. There was some hope that this 911,000 estimate of big downward revisions was going to be more in the sevens. It ended up being in the mid eights. That's a big downward adjustment. I haven't done the calculation.
Matt is ready for takeoff.
But certainly
yeah.
what you would do is you would take all of that period of time and you would adjust downward the average month. I need to look at how they apportion it out over months. So was the weakness towards the end of the period, towards the middle, and also there will be downward adjustments, and I'll get some analysis on this shortly.
It's holding too. They're not fading it. They're not giving it back.
To the subsequent 9 months of
Nice little
25 and 26.
While you work on, stay right there. Also, let's
going
bring a few more
from
voices to react here to what we just
69.45
learned.
to
Again, a big jobs
69.74,
report with a lot to
30-point pop
unpack.
there.
Kitty Richards is senior strategic
Dude,
advisor
look,
at Groundwork
the Russell is
Collaborative
so
and a former
strong.
Treasury official in the Biden administration.
Look
Peter
at
St.
the Russell's
Onge
going
is
to be
senior
going for an
economist
all-time
at the
high
Heritage
today.
Foundation.
Look at that.
And of course, Steve and Rick are both here with us as well. Peter, go ahead. What are your thoughts?
It was a blockbuster report. I was surprised. Sort of the meta story here has been that we've already gotten the pain on jobs, meaning 2.5 million deportations, federal layoffs, slower federal spending. The problem
Qs are
was
still
that
lagging
the
a little
drivers
behind.
of jobs, so
Bitcoin's
Fed
actually
cuts
not
and
reacting the
reshoring,
best to it.
Trump's talking about $4 trillion
Gold
plus
was getting going this morning, a little bit of a hit. Silver, same thing, was getting
Those all
going, a
take
little
long
bit of a
time.
hit.
It can take years, in fact.
The dollar
Taiwan Semiconductor is taking 40 years on their factory out in
is
Arizona.
trying to recover
so
there
I
on the
expected
daily.
continuing sort of paper weakness. This was blockbuster.
TSM, new all-time high.
I think that's a somewhat odd
Nvidia
take given the
up
large
1%.
revisions that we saw. It's
Palantir down.
great that
Tesla
revisions
up,
came in at
Microsoft
860-something thousand
Google
jobs,
up,
fewer
AMD
than we
up,
thought, rather than
Meta
900,000
up,
jobs. But
Amazon
that's still a huge
up,
downward revision to
Apple
last year.
up,
And it really changes
Avago
the picture of
ASML
near
up,
net zero job
Walmart
growth
up,
over the course of
Rumble
2025, which is not what we
Netflix
thought
up,
we were looking at last
DJT
year.
up,
I'm
Oracle
glad to
up,
see payroll employment came in
Hood down. They had
stronger
bad
than
earnings,
anticipated,
though.
but a lot of that is because of really low expectations. 60,000 would have been a very bad
Crypto
print.
is not
And so
liking this
I think
because
that
the
this print
dollar's
still
strengthening,
demonstrates
obviously.
continued weakness in the labor market. It's nice
But
to
the rest
see
of the world
that manufacturing
is ready
employment
to
is
go,
ticking
brother.
up for the first time in 9 months.
The rest of the world
it
is
had
ready
been
to
falling
go.
month after month after month. That is not something that you would
the
expect.
Dow hit a
if
new
you
all-time
see,
high?
Strong investment in manufacturing. Instead, what we've seen is cutting back
Oh, it's
on
not
some of the
open yet,
investments
but
made
we'll
in the
probably
Biden
see a new all-time high
administration,
in the
and that really
Dow,
putting a
the
drag on
Russell, and
manufacturing
maybe the S&P
employment.
500
So
today.
I think that
Probably
this is
not the
going to
mid-cap.
put the Fed in
Probably
a
not
continued
NASDAQ.
tough position. We're still seeing consumer sentiment weak.
But
We're seeing
I'm expecting
inflation
upward
stubbornly
mobility.
elevated, and we're seeing this continued kind of anemic,
Bitcoin
low
not
higher
liking
job
this.
market that's
I mean, it got a
holding
little
back
pop, but I
wage
mean, the
growth
daily
and
chart,
making
ugh.
life less affordable for the American people.
So, I
Peter, you
mean,
wanna
it could be
respond to that?
worse. It could keep going down.
Yeah, well, the revisions were absolutely massive, but that has to do with the incompetence of the BLS's models. The birth death specifically, which got boosted during COVID by all these fake businesses like Somali leering centers. So yes, that's a deeper problem with the BLS. But in terms of looking at where the job market is right now, I think it's far stronger than many of us suspected now. As for the pain in manufacturing, so Biden is definitely contributing because a lot of his crony investments in the Inflation Reduction Act, those are now going bust. That's taken about 40,000 jobs out. Meanwhile, with deportations, you've got a lot of low-end manufacturing that can't pay more than $7 an hour. Now, I'm not sure that those are the jobs we necessarily want to be here. But, again, manufacturing, that should be turning around now. We've got $4+ trillion of investment. Rule of thumb is every trillion of investment is worth about 1 million jobs. But those take time.
Steve?
I'm just
Inflation
looking
Reduction
at
Act
the
investments are being pulled back because of Republicans in Congress and the Trump administration rolling
gonna
back
go
those
at it?
investments. And that's driving up utility prices, especially electricity, across the country for American families. So I think it's a little bit bizarre to lay that at the feet of the past administration.
Go ahead, Steve, what were you going to say?
I'm just looking at the trend of things. 41, 48, and 130, and it's a little hard to discern what that trend is. And I would try to take a middle ground on the political here, which is the sense that there's a lot of balls in the air, and some of that I think has created some uncertainty.
You heard it here
and
first,
it's not
folks.
quite time to say things are settled and I know what to do here.
Balls.
We saw a big decline in small business employment from the ADP
Are they literally
numbers.
laughing at
I think
that?
that's a big driver of what's going on. And again, I would just take a little bit of grain of salt. January, they adjust these numbers by almost 2 million.
And
Okay, the difference between the seasonally adjusted and the not seasonally adjusted is almost 2 million. And the idea that you're going to either this is a different from the trend, all of a sudden everything is okay.
Right.
Remember, I showed you that chart of retail hiring in October, November, December. It was all negative. So just take it with a grain of salt.
Rickster, what were you going to say?
I'm going to say that nobody's going to rain on my parade, and these numbers are what they are. And 50K, I made this hat 2 months ago. And the reason I made
Rick?
it is for exactly a day like today.
Oh,
All these naysayers
brother, I
steeped
gotta
in
get me one of
politics
those hats.
Continue to be negative.
Dow
That's
50K.
okay, because
How do I get that
50K
hat?
says you've all been wrong. You keep from going in the
How do
water
I
even
get
though
that
it's very
hat?
hot outside. I say all the investment gurus out there,
I'm looking it
jump
up
in
right
the
now.
markets in the U.S. because global GDP is going to take a big ramp up, and the U.S. is leading the way.
Kitty, you want a hat?
I love that hat. And we have seen stock
Too
prices
bad.
going through the roof. It's just not really helping American workers and families.
I don't
think-
like her.
well,
I don't
it's
like her
getting better.
vibe.
And let's go back to.
I feel like she's
the
going
Fed,
against her
Steve.
boy
Do your
Rick, and we
strategy
can't
there.
stand for that.
Because everybody's going in their political.
We can't stand for that.
What's the question?
I'm Fleetwood Mac here. I'm just going to go my own way. The Federal Reserve, does this change the odds of a Fed rate cut? Because inflation rates have come down a little bit, and then we hear some of
This
the people
guy in the
you
top
interview so well
left,
say,
I fought with him
"I'm
about
focused on the
market
job
making
market."
on
Well,
Yahoo
if
Finance
this number
one
is to be
time.
believed, absent the revisions
Just a
that you
little bit
talked
about me.
the job market seems to be pretty
Yeah, just a
good.
little
So
bit
does
about
this
me.
change
Whatever.
the odds
Not a big deal.
of a Fed rate cut?
Let me tell you how I think the Fed will think about the
You tell
employment
me.
market. And I think they think about it the way I do, and maybe it's reflexive in that I only think that way because I think they think that way. But anyway, I think they create
Sorry, I'm still
a
fighting with
narrative of what they
Verizon
think is going
Fios.
on. And I think they believe, I thought Rick's 50K was going to be for the new run rate of employment. That 50 is the number. I didn't know he went
The
down
BLS
50K because I would have had a hat that said 50K.
Humble brag.
That's the number that I need to keep the unemployment rate unchanged.
Only type
I
of
think that's
brags
what they
I know,
believe.
brother.
I read all of the economists and their explanation.
I'm gonna
of
warm
what's
up the
happening.
magic in the
Let me just
tarot
finish,
card
Bill,
set.
Ricky here. And look at demographics.
Put your hat
and you're in
back
that
on,
20
brother.
to 70 range here. And I think a number comes along, Brian, that's out of
Fios,
sample
yeah,
of
they
what
have the best
think.
internet, in
I think
my
they're
opinion.
going to judge it and say, what else do I
I mean,
know?
my next
I know
internet
ADP
is
is
2
weak.
gigs.
I know that
It's
Jolts
gonna
is
the
weak.
internet's gonna know what I
And
want to
would
do
say,
before I
Brian,
know
is
what
the
I
Fed
want to
has
do.
time.
Who
They're
else
gonna
is giving
take
out
the
2
time
gigs
to
of
look at
internet?
another employment report, look at the other data that's out there,
Tarot cards
and
are
say, you know
janky.
what, is this 130 in
Well,
sample?
that's what
or
people
out
say
of
about
sample?
your
For
mom.
the moment, I would suggest they would believe
Are you
it's
stacking
out
the
of
deck? No,
sample,
I'm trying to
but
shuffle.
They would get
I'm a
some
horrible
confidence in the
shuffler.
following way.
So I'm
It's
trying to
not
get all the
negative,
magic
it's
in.
not zero.
Yeah.
It's
You
up
said you're
there,
fighting
and
with
I'm gonna
Fios.
say, okay, maybe
I'm
I've
basically
got 20, 30, 40,
groveling
50
to them to
extra
install
in
my
there,
internet on
but
time,
50K
so I don't have to
would
live
be
like the
hat that
Amish
I would wear
and
for
not
where
have
it ought to
internet
be.
for
And
a
I think
week.
that's what the Fed thinks,
See,
Brian.
we can all come together around
I
jobs.
don't think we're going to
50K.
get any cuts this year.
That's
Really,
why it'll be
Rick?
complicated
I
for
don't
more
think
we
people
get any
with
cuts.
timing. The way that you're
Well,
not alone, Rick.
that's
At
why they
this
picked
rate,
Kevin
Rick needs to
Morsch.
get a Dow 60K hat.
Thank you all.
And I'll get a 60K.
AT&T
Pretty
offering
soon I
5
will.
gig to the
I'm
house.
drawing that
5
one as we
gig?
speak.
Peter, Steve, Rick.
There's 10
thank you
gigs
guys.
in
Really appreciate
Switzerland.
it.
Holy shit!
All right, coming up next, Lyft CEO David Risher is going to join us to talk about the recent quarter. And you see from stocks move this morning, investors not happy with the rideshare numbers, revenue. We're going to ask him all about it after the break. Squawk Box. We'll be right back.
All right, we don't need to listen to that. We don't need to listen to that at all. All right, we're going to kill the volume. Okay, how are we holding? We're holding well. SPY popped, Qs popped, Russell popped, dollar popped. You have gold down, silver down, bonds down, yields up. Also on the note of yields, remember 1 p.m. today, 1 p.m. Eastern, there's going to be a 10-year note auction, and then tomorrow at 1 p.m. a 30-year bond auction. How are the 30-year yields? also up. So, okay, all bond prices down, all yields up. That was, if you don't know what happened, like the skinny on it is unemployment just came in lower than expected and jobs came in higher than expected. So the fact that the labor market is showing strength, this is exactly why Rick and other people on the panel were saying we're probably not getting rate cuts now this year. Because remember, when it comes to the world of rate cuts, they're only going to do it when they think the labor market is soft, as in not trending in the right direction. And obviously, they're going to consider inflation. Remember, when it comes to the world of the Fed and monetary policy, their goal is to keep inflation at their 2% target and keep the job market strong. So they're going to cut rates if they think inflation is fine, but more so if they think the labor market is under pressure. We're getting signs right now that the labor market, at least as of this data drop, is not under pressure. Actually, the labor market's looking pretty decent right now. And of course, you could get very specific and maybe look at individual details of certain sectors, certain age, cohorts, things like that. And I bet you could find weakness somewhere. But in a general sense, we're actually seeing somewhat of a strong labor market right now. And that's exactly why the panel was saying, okay, we're probably not going to get a rate cut. And then not only is the market going up, but look at the dollar. We're finally starting to see some strength here. I mean, the dollar, it's up a little bit, but I mean, overall, we've been trending down, down, down. Let me go to the weekly view. Ever since October of 22, the dollar is down and down and down, as in the US dollar is losing purchasing power relative to the euro, the yen, the pound, and other major currencies. But right here, you could see, yes, generically down, but on this one little individual report, a nice amount of strength. The dollar is strengthening. And that's why you're seeing this weird phenomena of equities going up, but you're seeing gold get hit because dollar is strengthening. So they're going to move, in this particular case, opposite of each other. You're seeing silver go down. And also because the dollar is strengthening, you're seeing the yield strengthen, because as the dollar goes up, that means it's more desirable to be into. So you're seeing yield go up while bond prices are going to be taking a little bit of a hit. Now, will this hold? I don't know. Your guess is as good as mine, but that's pretty much the skinny on the situation. Is right now the market is pricing in. Actually, can we find it? Poly market, maybe just Fed rate decision in March, and then let's see how many rate cuts there are going to be this year. Let's go back to the 6 hours. So right here, no change. So going into this, there was an 81% chance of no Fed rate change in the month of March, which is the next FOMC meeting. And now it's up to 91. So it's gone from 81 to 91. So the market is pretty confident there's going to be no rate change in March. And then can we see rate cuts? How many Fed rate cuts? Let's see what the odds changed in over here. 1 hour. Do we get a change? 1 day? Maybe we could see it a little bit better. Maybe 1 week. So as of right now, it looks like there's 24% chance of 50 bips, a 24% chance of 75 bips, 18% chance of 25 bips. And okay, so they're all really actually close to each other. So the market's we're not seeing much movement on the difference between no rate cuts, or I should actually say 1 rate cut all the way up to 4. But as of right now, and it's just winning, barely winning, 26% chance, so a 1 in 4 shot that we get a 50 bips rate cut, so probably 2 individual 25 rate cuts. And excuse me, once again, that's for the entire year. So that's all of the 8 scheduled FOMC meetings. So the market seemingly unsure about what it wants to do for the whole year. But with respect to the next FOMC meeting, the next Federal Open Market Committee meeting, which is going to be taking place in March, specifically March 18th, we're not getting a rate cut. No rate cut coming in March, which, folks, I mean, this is going to go the way of Kevin Warsh, the new Fed chair. He's a hawk. He doesn't want to cut rates. So with this type of data, I don't know. I don't mean this rhetorically. Like, I actually kind of want to directly ask you folks, is anyone else confused by Kevin Warsh as the pick for Fed chair? I mean, just time and time again, we are being told that Trump, from him directly, his True Social, his public commentary, that Jerome Powell is too late, he is too slow, he is stupid. And obviously, when I say he, I mean President Trump clearly has made his opinion that he wants rates cut. However, He just picked the guy who's the polar opposite of that. If you want rates cut, you pick an extreme dove, someone who cares far more about employment than they do inflation. You want the most dovish Fed chair you can possibly find. And what I find so interesting about it is Kevin Warsh, by his own admission, by his entire own personal history, he's the hawk guy. He cares far more about inflation than anything else. He's one of the few people in terms of the Fed, like, I guess, leadership, if you will, that back in 2008, even when the world was collapsing, he did not want to do quantitative easing, like at all. He's the opposite of a dove. And right now with this recent information, and granted, he doesn't take over until May, and we know that the next one's going to be in March, so there's going to be a little bit of a lag. But at least for the March one, we're not getting a rate cut. And then, well, a month or two after that, May, this guy's going to take over. There's really not compelling data to be cutting rates right now. You could say from the perspective of the fact that if you look at trueflation, and I know we're going to get the CPI numbers later this week. So according to the government, we're going to be getting inflation data that they're looking at 2.5%. That's coming out this Friday. I don't really trust it. Not only, does the government lie? Yeah. So, I think they will lie. I don't trust the BLS. But beyond that, I think they're incompetent. I think if you look at the way that they collect the data, it's silly. Not many people know this. 40% of what goes into the CPI, literally 2 out of 5, 4 out of 10 data measurements, it's some fucking pencil pusher at the BLS estimating it themselves. It's not some sort of rigorous scientific process where they go out and get all these data points. 40% of the CPI is fucking estimated by a pencil pusher at the BLS. Literally almost half of this that the market responds to and reacts to is an estimation from some fucking jabroni sitting at their desk, and they're like, yeah, whatever. What did we do last time? Yeah, that sounds good for used cars. It's not like they're going out and getting millions of data points. That's just not how it works, which is crazy. And then, I could go on and on about this stuff. Did you guys know that for the unemployment rate right here, how we got this 4.3%, most of the data is collected from just phone calls? They literally just call up a random cohort of people and they're like, hey, are you working? Are the people in your household working? Are you looking for a job? Are you not looking for a job? It's fucking phone calls. You would think that we could use, I don't know, some payroll data from the government on the state, local, federal level and see who's getting paid and who's not getting paid. No. That would make too much sense. Let's just do random phone calls and trust in people to give us honest, earnest information that has gigantic impacts on the economy. Let's do phone calls. That sounds like a cool idea. Let's estimate other pieces of data. That sounds like a cool idea. So as excited as I am about this, and obviously it is causing the market to pop, I do want you guys to know that you can trust this government data as far as you can throw the government, which is not at all. Not at all. It's just, when you take a look, if you're bored today, don't believe me. Go fact check me on this. Maybe I'm a kook. Maybe I'm a conspiracy theorist. I understand how I look. I understand how I sound. I get it. I wouldn't trust me if I were you either. So go fact check me on it. Go talk to your little AI system. Go do a little bit of research on the internet. Maybe the secrets are there on Epstein Island. But I'm telling you, folks, do a little bit of research and you're going to be like, hey, maybe that Matt Kook guy, well, he's definitely a kook, but he might be right about this one thing. So like I said, the data that we got, I'm not saying I trust it, but I am stoked that it is causing the market to go up, up, and away. And obviously, I think it's good to understand why this data report right now is causing the market to pop. And it really comes back to the strengthening of the dollar. And really, we're seeing yields pop kind of because of that. But it also kind of perfectly explains why gold's taking a hit, why silver's taking a hit. Obviously, we're talking in a very small time frame. We're talking from 8:30 to now. But just to understand kind of like the levers at play here and what's going on. Levers or levers? At what age do I go from saying levers to levers? Like, do I have to be 45, 50? Or is that like a grandpa thing? Is it not an age thing? Is it when you become a grandfather? Is that like the level? I feel like it's not a dad's thing to say levers, but it feels like all grandpas say levers. And also, at what point do I go from saying idea to idea? Is that the same thing? Is that like the differential? Like, you know, you're a grandfather when you say levers and idea, that you no longer have ideas. You have ideas. That's a good idea. I think it's a super German thing. I think that's what like all German grandfathers say. That's not a good idea. But I don't know. I feel like we're getting off the point, and you guys really just want to know where the market's going today. You don't want to care about my stories, my anecdotes. So here we are. We're going to do, where is it? We're finding out where the market's going today. Cats rule the earth. Tarot card pull for today, Wednesday, February the 11th. We're shuffling it up. No looking, no cheating. No looking, no cheating. All right. No looking, no cheating. All right. Cool, cool, cool. Ready? 3, 2, 1. Good. Put that down. Great. Abracadabra, alakazam, oh mighty market lords, will we continue higher? Holy shit, Harry Potter. We just ripped. If it ever comes into focus. Come on, focus, focus. You're never going to believe me what we just pulled. Dude, what a buildup. Is it not going to focus? Mr. Camera. How do I get it to focus on that? It's not. You guys are never. It's not picking it up. Come on, camera. Do your job. What do I even pay this camera for? It's not coming off my face for some reason. Is it going to even refocus? It focused on the background now. Now it's back on my face. What if I go real slow with it? The Magician. There we go. You guys can see that. That's pretty right there. Harry Potter's alive and well. Harry Potter is alive and well. We just ripped the Magician. I don't even need to look that up. I don't know what it means, but it feels like that's bullish. It feels like that is bullish. All right, where the hell is this? What does it actually mean? Let's find out. All right, like, dude, I don't even know why I'm wasting my time, because I'm going to look up what it means, and it's going to be like, yeah, that's as bullish as it can possibly be. Judgment, Jesus, the moon, the sun, the tower, the star, temperance, the devil, wheel of fortune, justice, death, the hanged man, strength, lovers, chariot, emperor. Where the hell is the Magician? Oh, there we go. All right, everyone shut up. The appearance of the Magician signals self-confidence and mastery. That's us. Duh. The power to make things happen. Hell yeah. This card reminds us that we are masters of our own lives and have the capacity to get what we want. When the Magician appears in a tarot reading, be ready to channel confidence so you can accomplish greatness. Fuck yeah. The Magician is one of the most powerful figures in tarot. Perhaps an empowering figure has appeared in your life, that's me for all of you, and will help change things for the better. Also, that sounds like it's talking about me. Or there is an important development to come in career, spiritual life, or health matters. Probably spiritual life, because we are going to be starting our own cult here that is centered around degenerate trading. Welcome to the church. This is the time to get out in the world and find what you want, whether this is a new partner or a career change. So, I don't know. It feels like it's subtly hinting at adultery, and I don't really want to focus on that part of it. You can find a new partner. Yeah, I'm not going to be backing that part of it up. Maybe it's a new trading buddy or something. I'm not liking the vibe of that last part, but overall, it basically sounds like I'm a market prophet. You guys should believe every single thing I say, and you should believe it with a high amount of confidence, and then things will be solid. We're literally already at the high from yesterday. Dude, this thing is ripping like no other. This thing is ripping like no other right now. Bitcoin caught a little bit of that bid. Gold did get hit, recovering a little bit. Silver did get hit, covering a little bit. I'm really confused that that's telling us to get into the world of adultery, but whatever. You are the Goonie God. Now that's Chunk with his little truffle shuffle. Quick question for all of you guys. How many of you used this report at 8:30 to degenerately pass an Apex account? You guys want to see me hack the mainframe? You want to see what I have to do every morning because I forgot to do it? I come in here. With code Goonie or else. just a little bit of me hacking the mainframe right there. You get 80% off with the code Goonie or else. You see how it's nice and then it's a threat. That's any good marketing. Anyone who's ever done any form of marketing will tell you the best thing you do is you come in calm, cool, collected, and then when the prospective client least expects it, boom, you hit them with a threat. That's called marketing, folks. You don't need to get your MBA from Harvard, Stanford, University of Pennsylvania. Welcome to the class of Matt. And any good marketing expert will tell you, kind of like when you're trapping a cat, calm, cool, collected. They can read your vibe. And then when they least expect it, you hit them with a threat. That's, folks, that's business 101. That is, dude, I'm giving away all the super secrets of running a profitable business. Wow, I'm sold. But anyway, did any of you use the 50-50 strategy? Obviously, it worked to the long side. What's Hood doing? They did not have good earnings. It turns out people don't want to be trading in their brokerage accounts with like straight up gambling in, I guess, event-based markets or whatever the hell it is. But we'll get to Hood. I promise you. We're going to get to Hood. But my question is, did anyone pass the Apex accounts, the 50-50 strategy, where you go long max contracts on some accounts, long max or short max contracts on other accounts, and obviously 50-50? Anyone do that? Anyone? I guess I would have done that if I could trade on Apex right now, but my Apex accounts are still frozen. It's still frozen. No, I didn't do it this morning. Dustin, you missed out. The green horizontal lines on SPY and Q are the highest from yesterday. So folks, we are not far away from that new record high. We're currently trading at 6985. And the all-time high is 7,002. We're right there. Damn, still frozen. You're frozen or I'm frozen? Who's frozen? My leader died that founded 4 blew up AI copy trader. What's up with that? I don't understand how some pass and some die. Because they're still independent accounts. So like there's going to be slippage. There's like the entries and the exits are going to be off by a certain time, and they are looking at the volume at those levels. Just because you're hitting the button doesn't mean they're all getting the exact same fill in terms of the entry or the exit. Assuming they're going to get the exact same fill at the exact same time is a poor understanding of liquidity. You do have to take liquidity into account, and you also have to take the technical. It's a slight delay, but the technical delay in like when it gets filled, because you have the lead account, and as soon as that trade is executed, it gets perpetuated to the other one. So like it could be slightly in your favor, it could be slightly against you. It's not perpetually going to help you. It's not going to perpetually hurt you. It can break either way. But to assume it is all perfectly the same all the time, like I said, that's just a misunderstanding of how the liquidity in the market works. But I guess the numbers were on early release. No, the numbers came out at their scheduled time, 8:30 a.m. Generally, I mean, I'm sure you can find counterexamples of this historically, but 99% of the time when you get the unemployment numbers, they come out at 8:30 a.m. ET. So you are 34 minutes late to class. They weren't early. You were just, in fact, late. They come out at 8:30. Wouldn't they just instantly ban those accounts? No, once again, that's just a misunderstanding of the rules. You're allowed to do that for the evals. You can't do that for funded accounts, but you can definitely do that for evals. And that's clearly stated in their FAQ. We've talked about it maybe a couple hundred times on stream here. No, it wouldn't. I don't know. Making money. I guess you're not that good at making money because you're clearly allowed to do it on evals. But once again, if you use that strategy on performance accounts, they'll never approve the payout. You're not allowed to they'll consider it hedging, but they'll consider it like windfall gain. So you're probably violating 2 to 3 rules. And actually, you're probably also violating the amount of contracts you're allowed to change if you're just starting out. So you're probably actually breaking 3 separate rules if you do that with a funded account, but you're actually not breaking any rules with an eval account. I use AI copy trader dashboard execution mode. It just seems better than orders, just spitballing, man, trying to understand. Well, how does it seem better if it's not working for you and you also don't understand it? Yeah, Apex has too many rules. I don't agree with that. I mean, they all have rules and they're all very, very similar. And it's one of those things that there's a learning curve to it. But as soon as you go through it once or twice, as soon as you walk around the block, you understand it. The main thing you have to know with Apex is just, okay, when you start trading, there's the 30% consistency rule, and there's also the 30/50% MAE rule. And once you get used to that, like once you violate the rule once or twice, it's pretty easy to understand what it is. I find a lot of the times people who are complaining about rules, and this isn't just for Apex, it's for TPT, Tradeify, all that. It's one of those things that like you just weren't good at trading to begin with, or you made a silly mistake. And hey, I've done it. I'm not saying I'm better than this. I broke those rules. You break the rules, you learn what the rule is, and then you move on with your life. I don't think it's one of those things like, oh, it's nefarious and there's so many rules and they just come up with new rules and I can't understand them. Did you ever read the FAQ? Like, honestly, order mode is slippier entries than executions mode, it seems. No vitriol, please, brother, LOL. It's not vitriol. It's just like, dude, own your own mess up. If you don't know what you're doing, how can you expect it to work? And there's no such thing as like slippier or not slippier. You either have market orders or limit orders. That's what it is. If you have market orders, you're putting yourself at risk of having slippage. If you have limit orders, there's not going to be slippage, but there's also not a guarantee of you getting filled. There's no such thing as slippier types of orders. Either you're putting yourself at risk of slippage, as in a market order. A market order is literally saying, I want to buy or sell, depending on which way you're going, and just get me as fast of a fill as possible. That's where you could have slippage. A limit order is saying, I want to buy or sell, whatever direction you want, but you're saying you only want it at a specific price. There's no such thing as slippier types of orders. That like you're either doing limit orders or market orders. Of course, you might be getting in or out, and you might be buying or selling. But at the end of the day, those are the two types of orders: market or limit. There's no such thing as like give me a market order, but somehow make it less slippy. There's no such thing as a market order, but somehow make it more slippy. That's just not how the market works, like at all. That's not how I don't know what to tell you. Feels like maybe, folks, remember, as there is clearly a learning curve to trading, especially active trading, it is okay to trade with a paper account. These are the types of things that it's a pitfall that is easy to get trapped in. And because of that, it's one of those things that you just don't know what you don't know as you're starting a brand new thing. So why take any form of financial risk when you could learn all of those types of things by just using paper trading accounts? I'm not even talking about SIM-funded accounts such as Apex, where there's a little bit of risk because you're paying for the eval. I'm saying a complete paper trading account. It's 100% free. There's no risk. There's no reward, but it helps you learn about these types of mechanics. And some paper trading accounts have no slippage, so just make sure that it's like simulating like actual trades. But even if you choose to do it with a SIM-funded account, like right now in Apex, you're getting 80% off. You could get an account for like $30 or something. And it's just a lower risk as you're learning those types of mechanical things. So remember, like the market's always going to be here. The market is always, always, always going to be here. So you don't have to rush it. You don't have to right away be saying, hey, I just started watching YouTube videos on trading last week, and next week I need to be betting real money. Don't put that pressure on yourself. Like some of the best traders I know, they start out with a paper account. They felt confident, start with a small account. Maybe it went well, maybe it didn't. They go back to a paper account. But it's just a game of minimizing your risk, because the way this works is it's kind of, let's break out paint here. All right. So you have the time axis on the bottom, and this is you learning about trading. You have your amount of money on the top. You need to survive this amount of time before you can actually start making money. If you blow out too early and you just don't have enough time to learn, you're never going to actually keep trading. You need to survive time-wise, which is the bottom axis. You need to survive enough time where you still have enough money that you're good and your knowledge is picking up. If you end up not giving yourself enough runway, you're just not going to get through it. So think of it that way, of there's a certain amount of time you're gonna have to put in your quote unquote 10,000 hours to learn this. So because there's gonna be that set amount of time, you need to have that financial cushion to survive it. And one of the best things you can do to help as you're learning is risk nothing at first. Now, of course, I understand that there is emotional implications, psychological implications when you start trading with actual money, which can only be represented and like fairly understood when you're betting with it. But there's a lot of things that can be learned beforehand where you're actually betting nothing. So paper trading is a great way to get going. I'm by no means saying it is the end all be all and it's the perfect thing. No, but it gets you most of the way there. It does. You can learn most of the things. And then when you start trading with real money, the only other extra thing you have to learn is probably a little bit of slippage about the market, but more so the psychology of managing actual losses and actual gains. But other than that, the mechanical things of how to execute your orders, how to set up your charts, like there's just so many things you can do in the meantime by taking on no actual risk. So one of the first things I would say to anyone who is new to the trading, or maybe they've been trading for a bit, but they're not profitable, is it is phenomenal to go with a paper trading account. I honestly think that like everyone should be rocking more time with a paper trading account. And then from there, when you're confident, take on a little bit of risk by doing things like sim funded with Apex. And then after proving to yourself that you can actually get payouts and you're profitable, that's when you go to the funding of your own account. You don't need to jump right all the way into sim funded. You don't need to jump all the way into like a fully funded account yourself. There are like a ton of things you can do to make life a little bit easier, especially at the start. Bob Kohrs Ross, I appreciate that. I have been working on my art ability. That's very, very kind of you. Very, very kind of you. Before we move on to the other stuff, any questions about it? That's why I love Apex. I can have a good 2 weeks without me getting in my own way in that time of the 2 weeks. Hell yeah. I mean, I wish, so when I started trading, sim funded was not a thing, that nice in between. I view sim funded as the perfect in between, where you're above paper trading. You're like, okay, I'm ready to take on a little risk, but you're not at that point in your career where you have like multiple months, multiple years of like proven profitability. So you still want a little risk reward, but you don't want that much like risk. That's why I love sim funded now, and I love pitching it to people because I view it as a perfect in between. Do I think sim funded is a place that people should live forever? No. I think it's a stepping stone to your own trading accounts, especially because most sim funded firms don't allow you to swing trade. And really, that's where the big money is. That might be shocking to hear, but think about it. Big money comes from following big trends. Inherently, if you trend over a day, that's good. But if you catch an entire trend for a week, even better. If you catch an entire trend for a month, even more money. So once again, when it comes to the world of trading, the big trends, the big movements are going to be a function of time. Just inherently, something can move more with more time. So as you are elevating your own trading ability, obviously swing trading is probably going to get a little bit more attractive to some of you. And maybe it's not everyone's cup of tea, but just speaking in generalities here, right now, swing trading is something that I absolutely love, but you just can't do it into the world of sim funded. They don't let you carry it from 5 p.m. to 6 p.m. When the futures market is closed for that 1 hour, they make you close out right before, and technically you could just reopen right away, but that's still technically day trading. You're getting in and out in the exact same session. My word was sloppier, LOL, wasn't implying slippage. What does the word sloppier mean in the world of trading? Just pointing out execution mode versus order mode on the copier in case anyone had seen a difference. I don't even know what that trade copier is. It's by no means a popular one. The most popular trade copier is probably Replicanto. And I would say right now on social media, I see a lot about Trade Syncer. So I would say those are the two popular ones, Replicanto and Trade Syncer. The one that you're talking about, I've never heard of it before. It is by no means popular. And honestly, the way you're talking about it, it makes it seem like it's not even worth it. Not even worth it. Affordable indicators. I mean, I think Replicanto is $150 for lifetime fee. Trade Syncer is affordable. If you're in the world of trading, in terms of affordability, if $150 is a make or break it package, like payment package for you, that probably means you should not be trading and you should be working on creating more of that disposable income. Use paper trading to increase your skill set. And then in other aspects of your life, when you have more disposable income, that's where trading is. People don't really want to talk about it, but trading is easier. Like, it actually becomes functionally easier the more money you have. And there's many reasons I could come up with that, but one of the most evident ones is pattern day trading. It is hard to be a successful trader if you can, as an active trader, I'm not talking about investing, that's a completely different ballgame, but as an active trader, the fact that in this market you are treated differently if you have below 25,000 versus above 25,000, that is one regulatory structural rule where it is harder to be successful. So right there, that's an example where if you have more than that, it's easier to do it. And then as your grub stake, as they used to call it, grows and grows and grows, you could start to do other things. You could sell naked calls, you could sell naked puts, like trading clearly. Like, no actual trader would disagree with the statement that trading becomes easier the more money you have. Like, that it 100% it does. So if you're at the point where you're trading and let's say you have like a sub $1,000 account, like this idea of like, oh, I'm going to grow this $1,000 account to like 50K. I'm sure there have been some people in history who have done that, but it's few and far between. It's not something that's going to be like replicable. It's just functionally the market is more difficult to do what you want to do what you should be doing if you have a smaller account value. So if you found yourself in that place of like, oh, I just need a little bit more money, great, don't trade. Work on paper trading. Grow your disposable income in elsewhere. And then when you get to that level, hopefully your skill set then matches it because you've been paper trading the entire time. And you're like, great, now I have the amount of money that I need. I have the skill set that I need. And that is your time to do it. A lot of the times when you're quote unquote like blowing out in trading and things are just not going well, it's because in one way or another, you're rushing things. You're either rushing things on the skill set side, you're rushing things on the account value side. It is okay. It is absolutely okay just to say, yeah, trading's not for me right now. I think there's a lot of other traders and influencers and content creators that are like, no, you got to trade right now. I would say everyone should be learning about trading, but in terms of like actually trading, no, there's a time and place in your life when you're going to be ready for it. And we're not all on the same page. That's like completely acceptable. It is absolutely completely acceptable. AI costs $295 on sale. I'll agree. It's costing me. Jiff riffing, bro. Love you. $295. That is way too expensive for a trade copier, especially for a shitty one. I feel like you got swindled. That's horrible. Replicanto is amazing and it's half the price. TradeSyncer, people seemingly love it. I've never used it and it is far less expensive than that. Dude, you got duped $295. That sounds horrible. That sounds like, dude, you got tricked. That sucks. That sounds absolutely like, I mean, I use Replicanto. I love Replicanto. One-time fee, $150. They even have like some sort of node set up where other people could trade for other people, which I think it's cool. I've never heard from it. But you pay double the cost for something that's a shittier product. You should have done a little bit of your market research before that, man. And I don't mean on the market. I mean at like what's going on. Or if you really wanted to, you could have been a baller, gone to ChatGPT or Claude and built your own trade copier, and it would have cost no money. You would have just been able to, it would have just been time. It would have just been a little bit of time for you to build it out. Anyway, we could come back to this conversation. MK, no coffee thoughts on whether or not you remain bullish in the Discord. I literally posted all of coffee thoughts. It's all exclusively in there. And then I posted a breakdown also. Well, I posted pretty evident memes in trading chat. VTech, I would highly recommend go read Coffee Thoughts. And I would highly recommend go read what I put in trading chat. It was right before the report and right after the report. Obviously, it is all in there. Very, very quickly, we have a couple things to go over. If you're joining right now, we started early today because there was the unemployment rate, the numbers from January, way better than expected. Non-farm payrolls, they expected 66, came in at 130. Unemployment rate, they expected 4.4, came in at 4.3. Obviously, this caused the dollar to go up, yields to go up, bonds to go down, gold to go down, silver to go down. Obviously, relative to where it was like right before the report, I'm not talking about something catastrophic. Very, very good for equities. And speaking of yields popping, 10-year note auction is today, so you might want to pay attention to that. U.S. 10-year yield touches 5-week low before delayed jobs data, and it is now moving swiftly in the opposite direction.
So, Stuart, the consensus is 65,000. The whisper number is more like 35,000. What's Bloomberg Economics?
I think both the whisper number and the consensus forecasts are way too high. We think that it's going to be even below 10,000 jobs added in the month of January. I think folks are really failing to incorporate the updated birth-death model at the Bureau of Labor Statistics that estimates basically the number of companies that are born and the number of companies that go bankrupt, and as a consequence, the number of jobs that are created on net each month from that business dynamism. When that process is revised, it's going to strip out about 30,000 jobs per month that had been propping up the typical monthly flow of job creation. And I think that that's why we saw comments from White House NEC Director Kevin Hassett, from Peter Navarro, trying to talk markets down from expectations of such a high jobs print. I think 70,000 or even 40,000 on the whisper is way too high. It's going to be closer to zero.
Worst case scenario, say it is zero. Say it's minus. Hell, why not, right? Is that enough to cause the Fed to start worrying again? I mean, the difference of 30, 40,000 in a typical month and a typical year wouldn't really be that much outside the margin of error.
Updated coffee thoughts.
I think for a single month's print, it wouldn't drive the Fed to change its mind about rate cuts in the near term. I think if we were to see an uptick in the unemployment rate back to 4.5 or even higher, that would get the Fed to move. I think that for the rest of the market, though, for folks who think that the labor market is outright tight, this is going to be a wake-up call when we see revisions, when we see a re-estimation of the birth-death model, and we see a slower flow.
No, the fault was mine. It wasn't yours. I didn't hit enter.
Net jobs created each month. I think it's going to be a real wake-up call. But for the Fed, it's all about the unemployment rate.
It's all about the unemployment rate. So that came out before all this, so it's a little bit dated, but now it kind of gives you the context of some of the moves that we're already seeing today. What is this? FAA abruptly lifts order halting El Paso airport flights for 10 days. Okay, interesting. GOP defectors help spike House measure to block tariff disapproval votes. 3 House Republicans on Tuesday voted with all Democrats to defeat a rule that would have prohibited the House from challenging tariffs issued by President Donald Trump through July 31st. With a razor-thin majority in the House, GOP leaders could not afford to lose more than one Republican vote. So a little bit of defectors there. Obviously, when it comes to the world of tariffs, are they legal? Are they illegal? We're kind of waiting on that. This could have a massive implication, and it feels like from the political side, things might be getting a little bit spicier. So I just wanted to put that on your radar just in case it becomes a bigger issue. Earnings. So late last night, we heard from Robinhood, Lyft, Ford, Cloudflare. This morning, we heard from Shopify and McDonald's. Tonight, Cisco. Tomorrow, Coinbase, DraftKings. You might care about that. Robinhood not doing so hot. Hood right here. Hood is currently down 7.7%, getting smashed.
It was a mixed quarter for Robinhood. EPS did beat by 3 cents, 66 cents per share, but revenue coming up short at $1.2 billion. Some other key metrics, though, did disappoint, which is why you're likely seeing the stock down about 7%. Transaction-based revenue, that tends to be sort of a reflection of trading volume. That missed expectations, $776 million. Street was looking for $801 million for context. Options, the biggest contributor of that, did fall short of consensus, and then so did crypto and equities there. Funded customers pretty much in line, 27 million there. In total assets, though, average revenue per user, also a significant miss here. That came up short. CFO Shiv Verma telling me that the street got a bit ahead of where Robinhood was on transaction-based revenue because of a change in rebates. So basically pricing on the back end, they moved to a different model in Q4 to cater to more active traders, where the numbers tend to be a little bit lower. The rebate is lower, but he did say they are gaining market share with those traders based on some of the public SEC reports. Says they now have the highest market share in options. A lot of focus. We've talked about, Mike, on predictions markets. Growth area for Robinhood tends to show up in the other revenue line item that did beat expectations, $96 million. The CFO telling me that was up 300% year over year, predominantly due, he says, to predictions markets, calls it the fastest growing business within the company's history. And then January, we did get some updated numbers. Contracts there hit a record 3.4 billion. Robinhood did also share some January, February volume numbers. These are important. Equity volumes up 57%, options up 20%. Verma telling me that was thanks to a lot of dip buying. Start of February, he says, in the first 10 days, we are seeing, quote, a lot of trading activity, a lot of net deposits, and a lot of our customers leaning into the dip buying now. Flash forward, though, crypto trading volumes. That was down about 57% year over year in the month. Did ask him about a prolonged crypto bear market. Verma says that crypto is less than 20% of revenue, or roughly 20%, pointed to more diversity in the business. That other 80% has 11 businesses now with 100 million of ARR or higher. They're not going to give revenue or earnings guidance. We don't typically see that, though. Spending is set to increase 18%. They have done some in M&A, and they plan to invest heavily in product launches. But
dude, this internet setup is such a fucking headache.
Well,
Jesus Christ.
He is off the motor, and he is.
I swear, Verizon is one of the dumbest fucking companies in the goddamn world. Like, just so fucking stupid. You know who isn't stupid, though? Cloudflare. Cloudflare beats analyst expectations, ups revenue outlook. Cloudflare stocks. Currently up 12% in pre-market. Up 12% in pre-market. Cloudflare, ticker symbol NET, absolutely crushing. Ford reports worst quarterly earnings missed in 4 years. Guide for better 2026. Ford is just F. Ford is actually slightly green, so people are, I guess, looking past their previous performance, and they're looking forward to what might be coming down the pipeline. Lyft stock falls 15% on disappointing fourth quarter results. Rider numbers, LYFT. I'm not the most surprised. It's down 17% right now. Holy cow. Lyft getting destroyed in their earnings. I'm not so surprised about that. Whenever I use rideshare, and I use rideshare a lot, I never think of it. I'm almost 5. Shout out, Kimmel. 59 months, dude. Truly appreciate it. Lyft, it just never, I mean, I've never even really had a bad issue with them or anything. It's just something about their branding, something about their marketing. I truly never, ever, ever think to use Lyft whatsoever. And I think that's a big problem for them. So we'll see if they can turn it around. I'm not necessarily against it. It's just I think Uber has a lot better branding. Not necessarily in terms of earnings, but since we talk about XAI and SpaceX, and we're all pretty excited for it, Musk's XAI loses second co-founder in 2 days. Elon Musk's XAI yesterday said it lost its second co-founder in 2 days. Influential researcher Jimmy Ba on Tuesday announced his departure in a post on X. His departure comes just 1 day after the other co-founder, Tony Wu, announced his own exit. Musk's aerospace and defense company SpaceX recently acquired XAI in an all-stock transaction valued at $1.25 trillion. This is setting up for the largest IPO in history. The business combination of XAI and SpaceX, set to make its public debut at the end of this calendar year, is right as of now gonna be the biggest public debut we've ever seen. So I'm very excited for it. I know many of you are excited for it. I'm getting some sort of breakout alert. What is that? Okay, technical breakout on ES and on NQ, I guess. Let me update that. Yeah, we're moving today, folks. We're moving today. Look at that. All right, so the market's about to get going. Obviously, things are looking pretty freaking bullish. I'm expecting the Russell 2000 to hit an all-time high today. I'm expecting the S&P 500 to hit an all-time high today. I'm not expecting the NASDAQ to hit an all-time high, but I'm expecting it to have a good day. I'm expecting it to go green. Gold and silver, it's reacting pretty interestingly, so I'm going to kind of hold off on throwing out statements there, predictions there. But overall, the equities market is long and strong. We are above the high of yesterday. We are within spitting distance of the all-time high. The all-time high you can see right about here. Oops. Daily is 7,002, and we're currently trading at 6,984 on the S&P 500. If you look at the Russell, this is the one I'm also expecting it at an all-time high. We're trading at 2,704. 2,738 is the all-time high. Gold, it's looking decent on the daily chart. Intraday did get hit right when that announcement came out. You can see we were pumping. It did drop on that. It recovered a little bit. Same thing with silver. It was pumping till the unemployment report. It's recovered decently. The dollar's looking strong. Definitely not an all-time high today, but overall, I would say the recovery is looking decent. So dollar up, yields up, bonds down, gold and silver, who knows? Bitcoin, not really catching the best bid. It did pop a little, 66.4 to 68. So, hey, that's better than going down, but it's not like we're anywhere close to the all-time high. So that's the setup on the day. And on that note, Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, we're getting some sort of alert on Tesla, a potential daily break. What are we seeing on Tesla? Oh, Tesla making a move to the daily 50 EMA. What do you guys want on the charts today? Obviously, we'll watch the SPY and the Qs because we are in that territory of the all-time high. Do you want the Russell because it's popping so much? I'm seeing a big bid here on Tesla. What do you guys want? Comment away. Let me know. We don't need this anymore. We don't need this anymore. We don't need this anymore. SPX. I'm just cleaning up the chart. Obviously, I will be showing you the options flow as soon as it gets going. All right, let me reload that. I'm going to show you what's going on right now. We just don't have the most data. From a momentum perspective, 5-minute, 10-minute, 30-minute, 4-hour, all bullish. 5-minute, 10-minute, 30-minute, 4-hour, all bullish. With respect to my options trades, did any of those get locked in yet? Everyone in the Discord knows I've been swinging. Yes, okay. The SPY position did get locked in. Alert, alert, alert. Alert, alert, alert. If you are in the Goonie Trading Discord, the SPY bull put spread strategy was locked in at market open today, and we made some money. All right, I'm uploading that as quickly as I can. So the only live swing play right now, just for those of you keeping score at home, is the QQQ play. SPY. All right, I updated you guys there. I am expecting the QQQ play to also lock in today, but we'll see. I do need a little bit more strength, a little bit more follow through in the NASDAQ. We already took out the pre-market high, so that is a good stat to know. Remember, taking out the extended hours trading high or low, it does tell you some interesting stats on the market. In terms of the S&P 500, these are the key levels I'm paying attention to. Let me update this so you guys know what would make sense. Okay, the little dash green line, that's the all-time high, the one with the little dots, and then the solid green line is the high from yesterday. So for the first 2 minutes we pop, now we're back halfway in that range. Let's see how things settle. Obviously, people are excited right now, but that doesn't mean there can't be some profit taking. Looking at the flow, Mag 7 not really doing anything. The S&P 500 slowly but surely grinding to the upside. Please remember, that's only 2 minutes worth of data, so let's just wait. I'm seeing an alert on Open, which I think is a pump and dump scam. Surprise, surprise. So even with the market ripping higher, Open is going down. That's what pump and dump scams do. Even when all the news is good, it gets crushed because people get all excited. They get caught up in this FOMO. And then all of a sudden, they start to lose it. There's like a couple final last breaths of life, and then it dies a painful death. How do I know that? Well, it's because I've seen it many, many times before. What happened with AMC? Are you guys seeing something similar? Let's play, you know that game that you can play at bars where there's like two images and you have to pick out the slight differences, but overall the picture is 99% the same? That's the game we're playing right here. AMC, it pops, does nothing, gets hit, one final breath, and then dies a very slow, painful death. Do you guys see the similarities here? It pumps, people get excited, has one final push, nope, dies a very slow, painful death. You can find a gazillion examples of this. The list goes on and on. Like literally, we could find over 50 examples and show them off on today's show. I'm not saying OPEN or AMC are unique in this. Like we have a lot of examples. So this, if you're buying it, I think you're just woefully uninformed, or you're caught with a bag, or you're just dumb. I don't know how to tell you, but it's not going to end well. Who's the guy that orchestrated this? Jack. What was his name? Open. What was that guy's name from Canada? There's like one guy who's like branding himself as the roaring kitty of Open. What was his name? I think he banned me because I was talking too much shit. What can someone in chat help me out? What was this dude's name? Open. Eric Jackson? Was it Eric? How does he spell it? Am I not Poolty? This guy right here, Eric Jackson. This guy, he did brand himself, and he blew out hedge funds before. It's such a joke. It's such a joke of a human being. And now it looks like he's trying to pump something else. SRXH. Most people ask why I focus on what we ship. Dude, I met him at a dinner once, and he was legitimately one of the dumbest individuals I've ever met in the game of Wall Street, which is sad because he's pitching himself as like a hedge fund operator. And if you look at it, he just is getting destroyed all of the time. So I'm assuming he's now no longer talking about open because it's ending in disaster, and it's going to get worse for sure. But it looks like he is attempting to pump something new. What is the new thing he's talking about? He's just trying to, he's one of these dudes who sucks at trading and investing. So now he's trying to become like a wannabe trading influencer, and just everything he talks about and does ends in horrible fashion. Horrible fashion. So that's what I'm expecting to continue with any of his particular playouts. So just want to put that on your radar, that if something seems like a pump and dump, it's probably a pump and dump. Is spot gamma lagging? It looks like I just had some sort of, do I need to reload it? Looks like I just needed to refresh it and we are good. I'm getting a message that something with their data providers, where they get their data from, something is off with it. I can see the message over here. So hopefully that comes back online, but hey, don't you worry. We have price action to lead us to the promised land. And I'm assuming if we saw options right now, that Delta would be dropping. To me, this is classic profit taking. You gap up, things are strong, people want to lock in. The question is, where can we make that base? And I want to see that higher low and then pop off the higher low. You should never be surprised on when we like are so strong in pre-market that there's profit taking right out of the gate. You just see it way too commonly to not be prepared for that. So a little bit of a pop there, you got some profit taking. And once that kind of gets out of the system, we can kind of wait and see what in the world is happening or not happening. What do we have here? Trending these days, spot. Okay. Patek Top Step is bullshit. I will be on Top Step TV around 9:15 CT to answer many of these questions as I can. Want to keep you all in the know. Top Step is bullshit. Don't use Top Step. Use Apex, use Take Profit Trader, use FFN, use any of the actual reputable ones. If you are doing sim to funded trading and you are using Top Step, you're just asking for problems. They are screwing over traders left and right. And if you fall for it after already explaining this to you, well, that's just on you. And why is half this feed just like half naked women this morning? Interesting way to start off a trading day, I suppose. All right, it's back. It looks like we do have the data. So you can see right here, a little bit of profit taking starting at 9:32. Some calls they were getting bought, getting sold. So calls just sold. Are they sold to open or close? Probably to close, but obviously we won't know that until the end of the day. So it was a bit of profit taking from 9:32 to about 9:37. Right here we are. And then the Mag 7 is currently flat. Looking at the NASDAQ. Little bit of data connection. Gooner certified. Oh, brother. Well, hopefully I'll be profitable trader certified when we actually start slapping on some of these trades today. I'm trying to be good and wait for the first 10 minutes. I didn't want to chase it out of the gate because I just thought there might be profit taking. I would be a little bit more comfortable if we also had options flow. We are getting it on the S&P 500. That's up to date. It's starting to recover. It's actually puts getting sold now. So we had calls getting sold, and then at 9:35, puts are being sold. So we're going to see how this plays out. Where are we in terms of key levels? We're actually at a key level 75. It's a key gamma level. You can see it pretty much right here. This negative gamma node where kind of puts guardrails on it. Negative gamma at 6975, negative gamma at 7,000. So there might be a bit of a reaction here. Below this, it does get choppy. Positive, negative, positive, negative, positive, negative, positive, negative. So it does get a little bit more painful in terms of like easy trend following trades sub 75. But remember, this is dynamic. This can change at any moment. This is all based on real-time trades. But I'm hoping buyers do come in right here at 75, literally as they're doing right now. And we can see a pop off of that. We are seeing a slight increase in Delta. Mag 7's not loading for me. Bookmap, we are seeing some VWAP is down here. Where is VWAP? VWAP is at 25,330. Might be a classic VWAP test. I do want to show you, I can't trade on Apex. I'm currently blocked from Apex as they're reviewing my account for the first fully streamed $1 million payout. I did ask you guys yesterday, has anyone ever in the history gotten a singular payout from Apex, $1 million or more, and live streamed the entire thing? And multiple people have reached out to me that no one else has done it. But once again, maybe someone did it and we missed it. That's possible. But feel free to prove me otherwise. But if I am approved by Apex, I do believe I'll be the first person in history to get a singular $1 million payout while live streaming the entire thing. There are other people who have gotten like way more payouts. I mean, there's a couple across 2 million, but I do believe I'm the first person to live stream the entire thing of getting $1 million or more. And I believe I might have a record payout for 50K accounts. I believe the people in the past who have gotten the $2+ million, I believe they were all on 150K accounts, not 50K accounts. So we might have a record there. I won't know until it either gets approved or denied and I can talk to the Apex team. But that's why you don't see the Apex accounts here right now, because they're just locked. I can't do anything. There's no buying, there's no selling. They are completely locked. So I'm just waiting on that. In the meantime, I am trading take profit. These are evals. I think I just need to trade one more day and then I could trade them as funded. And then on FFN, same thing. I've already passed in terms of the profit targets. I am just literally waiting for the trade days to hit so they can go over to funded as well. And then I have some fresh Lucid accounts. You guys saw the trading yesterday, and I also updated you on Twitter that I just got completely tilted yesterday when I was trading them. Where's my Twitter page? So just, I try to be as transparent as I can. I did not trade well. So right there, I lost those funded accounts. And then I tried to pass evals, and I was just being stupid, blew out. And then finally got back to normal trading and traded those well. And then that's what I plan on trading today. So this group, 1, 2, 3, 4, 5, the 5 that are untraded today, that's what I plan on trading. And I do have the trade copier properly set up. So instead of being a degenerate trading 3, 4, 5 contracts for no reason, I'm going to go back to what works for me. Trade one contract, stop the break even, throw in another contract. I was just being a bit of a doofus. I don't know if it was ego. I don't know if I was tired. I don't know if I was just being stupid. I don't know if it was a bad trading day. I don't know what it was, but I was trading like a little bit of an asshat yesterday. So I'm hoping to bring that back in today, reel that back in, and maybe do some actual legitimate good trading. So that's the plan. Obviously, these are my futures accounts. I'll be trading options. Obviously, I update that in real time for everyone within the Discord. If you want to join the Goonie Trading Discord, sign up. It's pinned to the top of chat. It's in the description of the video. You can see my option trades, my futures trades. There's a lot of previously filmed educational videos that you'll have access to. We have a news bot in there. There's more bots about to come in there. We're about to get a seasonality bot. There's a lot of traders in there trading together in voice chat. There's written chat. Sometimes we do some like sports leagues and gambling. So just a community of traders. So I implore you guys to check it out if that's something that you're looking for. I mean, I have a fun time in it. Apex right now, 80% off with code Goonie. Before I showed you guys that I hacked the mainframe and I'm now threatening you or else. And then Spot Gamma, 80% off. Spot Gamma is this tool that we use right here. Oh, wait, we're back to 75. Hang on. Okay, we might not be holding this 75 level. If 75 doesn't hold, I'm watching 60 followed by 50. 50 is another key gamma level on SPX. I think I need to move myself over here, right here. 50 is another gamma level, also psychological level. And then the 1 minute 50 EMA, which traders do react to, is at 60. So if we don't hold 75, I'm looking for 60 followed by 50. If we do hold 75, I'm looking for the recovery above yesterday's high and close. No, the top of the transition zone 85 and the closing value 86. So I'm looking for that as my first target. My second target would then be pretty much the all-time high, 7,002, or just this key level at 7,000. So right here, this would be bullish target number 1, and this would be bullish target number 2, and then the reach target would be 7,010, followed by 7,030. How did I come up with those levels? Well, Spot Gamma gave it to me. I could see there's large positioning at 7,000. I could see there's large positioning at 7,010. I could see there's large positioning at 7,030. So how am I getting those levels? No, it's not gut feel. I'm literally tracking where the big money's positioned. And if you want to take advantage of that, 80% off with the link pinned to the top of chat. We are starting to pick up right here. We're at 400. Oh, brother.
Order submitted.
All right. It's a little early for me. It's 9:45. I try to not trade unless it's past 10 a.m., but I just like the setup. You know, I'm not risking that much. We didn't hit VWAP. Honestly, the setup that I like here is more so because of the S&P 500, this perfect bounce off of 75, leading us to the first target. So really, I went long on NQ because I know NQ and ES are going to be correlated, but it's more of on the S&P 500, we came down to support, and we're seeing that bounce. This bounce might fail and I might get screwed. That's obviously possible, which is why my risk is in control and I'm not risking that much. I would have preferred that NQ actually tagged VWAP because I know there's going to be a lot of buyers coming in at VWAP, but hey, that might not just happen today. So we're taking a stab at it. I'm trading one contract, unlike yesterday where I was kind of like doing something I shouldn't be doing. I'm keeping the risk obviously in control. I'm taking a stab at it. It is trading with the larger trend. Like I said, this was the target. Unfortunately, it looks like there's a lot of profit taking at this target, and it might just be coming to VWAP right now. Do I want to give it a VWAP bounce chance? The only thing in my mind, no, I don't want to do that. No, I'm going to leave my risk right here. Yeah, I'm going to leave my risk. I was thinking about letting it touch VWAP, but if it does, I'm torn. Because overall, the trend is up. We do have higher highs, higher lows. I am trading with trend. Of course, trend can change at any moment, and I don't like how this order is now canceled. Fuck, I'm having order issues. When it's yellow, it's like stuck pending. That's not good. Hang on. We're having data issues. I just try to cancel these orders. Shit. Hang on. I was having these issues also yesterday. I don't know if it's a Trade-Evate issue or a Lucid issue, but I'm trying to disconnect, reconnect. It's not letting me. Shit. Okay. I am able. Okay. We got out of all the orders. Let me disconnect and reconnect again. It might just help clean this up. Hopefully the market doesn't go too crazy. Trade-Evate is having issues. Someone's reporting. I wonder if it's the same data provider inherently that Spot Gamma is using, because they're seeing some issues as well. Anyway, let's see if I could get the proper order in now.
Order submitted.
All right. I would love to move my risk up. I'm just going to keep moving my risk higher and higher and higher. Hopefully we don't break. I don't like how much aggressive profit taking there was, but maybe we're just still curling back up. Once again, this is still target number 1. This is target 2. Target 2 is the all-time high. Target 3, target 4. That would be the bull case. The bear case would be a rejection again here or a failure of 75. That would set up 60 followed by 50. So target 1, target 2. And I'm just trying to see if I can catch the overall trend. I would argue strongly that the overall trend is up. Obviously, momentum is bullish, bullish, bullish. Momentum is bullish, bullish, bullish. That's how yesterday started, and it did revert. So just because we have a clear trend and momentum at one point doesn't mean it can't change on a dime. That's what we saw yesterday. We started off somewhat strong. We got hit. We tried to recover. Ended up being a brutal fake out, and then we just ended up getting clobbered. So that's why you got to keep your sizing and thus your risk in control, which is exactly what I didn't do yesterday. So basically, I'm trying to learn from my mess ups yesterday and be better about it today. But hopefully we are good over here. Hopefully we are good. I might move my risk up a bit more.
Order submitted. All
right, we'll take that one. What is the high over here? We saw a high at 65, I think. Well, we're going to get tapped anyway. What was this high? I'm reading a high of 65.25. So let's go to 60. It might not work anyway. It might be getting tapped right here.
Order filled.
I'm trying to not do exactly what I did yesterday and just add in and add in and add in. Knowing my luck, this is going to get wicked and then pop from here. But I was willing to give it to that low. I wanted for this trend to continue. Obviously, the fact that it took out this low, yeah, it might be a fake out. That's totally possible. But you know what also might happen? We might puke all the way to VWAP. That's totally possible as we're battling it out. So I'm literally just sticking to my plan of keeping my risk minimal. Dude, small cap is getting smoked over here. Like I said, knowing my luck, that's going to be the wick out and the pop. Probably is what's going to happen. Probably is what's going to happen. But literally, at first I was risking 40. Then I moved it up to 45. And then when I added on the additional, I moved it to 65. Unfortunately, if I left it at 55, I would currently be fine. And I would almost be back to breaking. I told you, as soon as I get wicked out, that's what it's going to be. But that you never know that. As much as I could show you, like, whatever, I'm joking right now, but 90% of the time when you get wicked out, then it goes in your favor. The other 10% of the time you were right to get out because it just pukes, and that's how you lose your account. So as much as it's not fun to deal with that, you have to kind of behave in a manner that it is going to completely destroy you. You have to, because every once in a while, it's not going to magically pop in your favor, and it is going to completely destroy you, and you have to protect yourself against it. So I guess I could have given it a second or two. Instead of 65, I could have gone to 55, and maybe that's like Monday morning quarterbacking right now because, I mean, it did get awfully close, so that just might be luck, like a luck aspect to it, but we're going to see. We're going to see. Overall, who knows? Maybe it was a good cut. Maybe we are going for that VWAP retest. What do we have over here? It's getting a little bit beat up. Ooh, we have a weird inside bar on the 10-minute on NQ. So first bar of the day, second bar, the high and the low are within that bar's high and low. Third bar, the high and the low are within that bar's high and low. You don't see that often. So basically, by definition, we're just opening with quite a bit of consolidation. We are not taking out any of the previous highs or lows since market open, which tells me that everyone's just jockeying for position and they don't quite know which way this is going to break. I want it to break to the upside because it's always fun to see new highs. But right now, if this data lows, dashboard has encountered unexpected issues. We're working on the issue. Hope to have the problem resolved soon. All right. Something with the data providers because we're seeing similar issues with Tradeovate. Similar issues. Something's going on in the world of market data right now. We are in consolidation on 5-minute. Bull flag on 10-minute. Maybe. I would say since market open, it's nothing but consolidation. Remember, the setup, the technical setup is very commonly specific to the time frame you're looking on. So just because you're like, well, this is bullish, it doesn't mean it's bullish on every time frame. And maybe you're trading on the 1 minute, but then someone else is trading on the 30-minute. You fairly can see the exact same thing or the exact opposite thing. So just be careful with that. We are trending down slightly right here. Oh, man. I wouldn't mind this, but we haven't hit VWAP. Like I said earlier, it would have been far, far easier if we just tagged VWAP. I would have... when do we get the unemployment data? Dude, you are an hour and a half late, as it is every single time we get it. It comes out at 8:30 a.m. ET. You are literally an hour and a half late. Not trying to throw shade, but I'm stoked that you 1 milli. You didn't shade your entire one. I did. I streamed every single one. Some of them were closed out, like in Discord, but I also then updated everyone every single day on Twitter. Like literally every single day, I posted the trade performance. So yeah, the whole thing was streamed, and every single day was done publicly, like without a doubt. No one's even come close to that level of just transparency with it. Literally streamed every single day, posted the updates every single day. I maybe there is a person out there, and if they did it, like obviously a massive congrats to them. I'm saying it's not an easy task whatsoever, but I don't think anyone's like even come close to it. Well, someone has to work his regular job. That's fine if you have to work. I'm just saying it always comes out at 8:30. Yeah, dude. Are we going to hit VWAP? Someone said ES is almost at VWAP. VWAP on NQ is right here at 338. I tried to take this breakout. Unfortunately, did not work. And it looks like it was a good exit because I would have got wicked out on this one anyway, which would have been like a little bit more of a loss. So as much as I could complain of like, oh, it did almost come back. Well, right after that, it did smash me in the face. Do you see BTC going any lower throughout the year? I think that's the wrong question. That's a question related to prediction. Who knows? I don't know. Bitcoin going up or down depends on, in aggregate, are people net buying or are they net selling? Are they net aggressive buyers or are they net aggressive sellers? I think it's far, far easier just to react to the development. Are you getting bullish breakouts? Great, be bullish. Are you getting bearish breakdowns? Great, be bearish. Like, why waste your time predicting when all the money is made from reacting? And I get those questions a lot of like, where do you see this going? And right away, that means people are trained to think that there's some sort of prediction mechanism that is possible. No, predictions are right half the time in this game. You can look at the best analysts in the world and they're lucky to be right half the time. Truly. It's a game of 50-50. And honestly, like, you can get higher odds when you have a longer time frame, like let's say a 3, 5, 10-year horizon, something like that. Yes, you can then develop better odds. Something's getting clocked right now. That is possible. But remember that even someone like Warren Buffett, like who has made a lot of money, it's because of the asymmetric nature of the winners. It's like, yeah, like when you're wrong, you just cut quickly. And when you're right, you ride it as long as you possibly can. Bro, you're way overthinking the question. No, I'm not. I'm trying to get people to understand how you actually make money in this market. You don't make money from just saying, do you think it's going up or down? I could say whatever you want. Do you want me to say yes? Yes. Do you want me to say no? No. That does not increase your ability of actually making money or not, because you're not increasing the odds. I'm not overthinking it. Unfortunately, you're just underthinking it because you don't know how to actually trade. Trading is not a game of prediction. It's a game of reaction to the current risk reward, to the current trend, to the current mean reversion. And it's just saying, are you willing to take that risk? Ideally, it's minimal. And then when you get into it, you ride it as long as you can. Or if you're mean reverting, you're looking for an overextension in one direction, risk and control, and you're praying for the pop in that short period. That's what it is. Without a doubt. And like, there are too many people who are tricked into this fantasy of thinking you could predict what the next bar is going to be. And when I say the next bar, I mean the next 1 minute bar or the 30-minute bar or the hour bar or the daily or the weekly. If someone were that good at predicting, they would be the world's wealthiest person within like a month. They would just keep doing it at a leverage rate time and time again. But inherently, it's impossible, because no one has done it. And the reason it's impossible is because price movement up or down is decided by the next batch of willing buyers and sellers. Where are they agreeing on price? That's the equilibrium, the midpoint in between supply and demand. So You don't know in aggregate what's going to happen, what retail is going to do, hedge funds, high frequency traders. You don't know what the administration is going to do. You don't know if someone's having a fat finger mistake. You don't know if an algorithm's good or bad. But all of those together, that mixture is what makes up active trading. So unless you know exactly what that entire cohort is about to do, you don't know where the market's going to go. So that's why it come like it's a game of reaction. We can identify where big money's at. We know whether you're looking at the transactions in the crypto ledger, whether you're looking at the open interest in options, you can get some pieces of the puzzle that tell you, okay, like these might be key areas, so I need to like pay attention to that key area. But in terms of how the market's going to react once we get to that key area, well, that's the fun in this. That's the point of like sitting back and saying, okay, this is a very important level. Are we going to bounce or not? And you go from there. I get it. I know that we all wish there was some sort of super secret model that if you just learn that, you can make unlimited money. And not to burst your bubble or anything, it just doesn't exist. Like, it just simply doesn't exist. And that's probably one of the most common things I get of like, do you think it's going to be earnings? Do you think it's going to go up or down? Who the fuck cares? It's the wrong question. Like that's not where you're going to make money. I guess it's maybe something fun to think about, and maybe you could be right, maybe you can be wrong, but there's no correlation between that and actually making money. That it just doesn't exist. I feel like chat really pisses Matt off. No, you don't piss me off. What pisses me off is the people who are horrible at teaching this. And you guys are getting, and when I say you guys, I don't mean all of you. Some of you in chat are very, very good at this game of active trading. But there are uninformed people and there's newer people who are bringing the baggage of other things that were previously taught to them that are just verifiably false. And that's the frustrating thing, is people are going out of their way with no credibility, no past performance, and they're just putting things out on the internet and people are just believing it. That's the frustrating part, is that it's not really, I guess, your fault. I mean, I guess I could be like, well, why aren't you back testing it, blah, 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 but who's really going to do that? My biggest gripe is there's people who are quote unquote trying to teach in this industry, who are trying to share how to make money. The issue is that they've never made money. They're exclusively good at marketing. They're not good at trading. They have no performance to show they're good at trading. And there's people who have massive, massive, massive followings who literally have no success in the world of trading, and yet social media would have you believe that they're somehow very good at trading. It just does not. It doesn't make sense. It doesn't compute. Lighten up, man. It's just a prediction. No, that's exactly what we saw with all the same people with AMC and GME and too many people. It's not like a lighten up thing. People are betting their hard-earned money. And as a chatter in here, maybe you don't have respect for other people's money. But as the person running the show here, like literally this gets millions of views. Like in aggregate across everything, all the content we put out, there's legitimate influence here. So I can't, I guess, mistreat the platform and the community by saying stupid fucking things like that. I guess you can do what you say and you want, but at the end of the day, like when you have a following, you have to respect that following. And I do have a respect for your hard-earned money. So I'm not going to just tell you what you want to hear if I legitimately don't believe it. And the reason for that is like, we saw that happen with XRP. We saw that with Doge and Shiba. We saw that with AMC and GME and Open. There's too many examples of people with a following saying what their community wants to hear, and then they get completely burned. Like, I mean, I would rather you guys be mad at me just because in the short term, I didn't say what you wanted me to say, but in the long term, it ends up you like have a better experience in the market, whether it's trading or investing. So like this idea of like, oh, no, lighten up, just like say what we want to say. Like, that's just fucking stupid. That's like actually legitimately a stupid way to handle it. And I would actually say out of the whole debacle of AMC and GME, it's why I'm the only person still making content that gets any form of views, is because the entire time I was just always saying the truth. And at certain points, it was the painful truth. But even look at right now in the world of prop trading. Why is this community one of the fastest growing communities in the world of prop trading? It's because we attack it in an actual like scientific Socratic method, and people have more and more success. It's the other people who are good at marketing, but then people, whatever, they're blowing out their credit card bills and they blow out all their accounts, and then all of a sudden they just quit and move on with their life. There's no like repeatability. And the only way that they fictitiously show it is they buy subscribers, they buy viewership. Folks, it is not hard to see who is buying their subscribers right now. You're telling me people are growing week over week, month over month, but their views are never growing? You're telling me that you have thousands and thousands of live confirmed viewers, but your chat is moving at the pace of a snail? Folks, it's so easy to see who's doing this bullshit. And apparently YouTube is so stupid that they still give out plaques for it, whether it's 1 million or 100K. Apparently their AI system is not like good at catching it. But as a human, it's super, super easy to see who is gamifying the world of marketing. But then yet not only are they cheating there, they have no actual track record of trading ever. I can get paid to be a subscriber. No. They're buying bots. They're buying like fake subscribers, like one of those like Indian bot farm type things, probably in Bangladesh. It's a bunch of computers. They just spin up accounts, do the bare minimum to pass the verification of YouTube, and then they're just there. And because they're bot accounts, they're not actually interacting. They don't comment. You just see it all the time. And it's bad. In the world of streaming, it's kind of a prolific issue across the board. You see it a ton on Twitch. You see it a ton on Kick. You see it a ton on YouTube. I mean, we've all seen those videos of people kind of getting embarrassed because like they're streaming and then they accidentally show the screen of them buying viewership. Like it's out there. There's a ton of little shorts. Like, dude, that shit happens all of the time. And I have to admit, it is pretty funny when it happens. But I mean, how many of those e-girls, like, it's just like the awkward little clips of them showing the exact software, and every single day they buy 1,000 viewers. Dude, it's some of the funniest shit out there. Market's getting hit, obviously. We sliced through that support at 75, the initial one, puked all the way to 60, tried to bounce off of 60, then got really hit at 10.02. We're coming up on major support at 9.50. That's what I'm paying attention to at this point. I remember always have the bull case, always have the bear case. Don't try to predict. Just say, okay, what is the current trend? Are you trend following? Are you mean reversion? What is the risk? What is the reward? And then from there, if you're accepting of the risk and you have the proper sizing, from there, then you're just letting the die roll. You are just letting the die roll. Did you see the recent video where a guy accidentally showed his crypto keys and immediately lost $100,000? Jesus. Does Matt go on ranch just to kill time? I'm assuming he's done live trading. No, I'm just waiting for the setup. I'm waiting for the setup. I didn't want to go bearish because we didn't actually crack momentum yet, but now we just cracked momentum. So on a pop that fails, I might do it, but it's not to kill time. It's to answer legitimate questions. It's answering the legitimate questions why we are like verifiably the best community doing this. This is why we have the best traders. This is why we make the best profits, is because we actually get into the nuances of what is trading, the framework to be successful in this game. And obviously we also call out the bullshit artists so you know what to avoid in the future. So maybe you don't like the way I present, maybe you don't like the way I trade, but at least you're learning the skill set to take forward with you to avoid the other bullshit red flags in the future. So it's not to kill time. I mean, I guess in a certain sense it is, because I'm waiting for my setup. But I uniquely have the capability to, I guess, walk and chew gum at the same time. We can do both. There's been many times where we're bullshitting and still trading. I tried to take the long on this first bounce. The first bounce failed. I got out at my risk level, and I'm happy I got out at my risk level, because if I didn't, I would have gotten absolutely steamrolled. It's just how you do it. I mean, you take a reasonable stab at it. Everything was bullish, and then it just kept getting hit. And actually, I think it's back up. You can see right here what's going on, and well, Mag 7's still down. So they must have, oh, no, that one's not working. Mag 7, I try to play this recovery right here around 9:45. Obviously, it just clearly failed at 9:55 and got smoked. The S&P 500, similar situation. I try to play this recovery, and then about 10 minutes later, it just got absolutely smoked. And remember, there's no way to predict that's going to happen. If I show you this data, I can show you many examples where this keeps ripping and the bulls got paid, or I could show you this example where a little bit later it got faded. That's the entire point of why predicting is silly. It's a waste of time. Yeah, you can data mine things here and there, and maybe every once in a while you can find certain edges. And if you do that, that's awesome. And like, you just have to stick to that edge and play it time and time again. But this idea of like, oh, I knew that was going to happen. The fuck anyone did. The fuck anyone did. People say that shit all the time. And then yet, all these people who are allegedly so good at predicting, when you're like, hey, can you show me like verified trading results? It's every excuse in the book. I can't do it because my dog ate my brokerage statements. I'm sorry about that. Oh, no, I can't prove it because I can't log into that account anymore. No, it's against regulations for me to prove to you like how good of a trader I am. But you should just trust me. It's such like a trust me bro world, which I find to be comical. Dude, if this closes, we were bullish across the board, but look at 5-minute crushed, 10-minute crushed. Granted, we have 20 minutes to go, but I might have to switch my intraday bias to bearish here. We were bullish, but look at the 30-minute. This is getting goosed. We're actually going for this green to red move. Yesterday's closing value was 6941.82. We have puked from 94 all the way down to 46, and we're about to get that green to red test. Up here above this white line, we are in the green, as in we're green on the day. Below it, red on the day. That's why it's called the green to red test. This is the difference from yesterday's close of are we positive or negative. What's gamma looking like? We sliced through this negative gamma, but we are coming up to positive gamma right here. So not only are we coming up to positive gamma, but we are coming up to some technical levels, that green to red test. So maybe some buyers step in here. It does make it a little bit more difficult because if they do, I don't really want to go bullish until we're back on the bullish side of things. So, man, I might have to pay attention to the 30-minute, but that we have 20 minutes to go. Patience. I rushed things yesterday. It cost me money. I lost those Lucid funded accounts. Today, I just don't want to repeat the dumb shit I did yesterday. So I think patience. We just have to wait. If we bounce off of this key level, I'm going to have to wait till I see bullishness across the board. And then if we break down, maybe I could take it, but it's dangerous because we're kind of right here in this mess. So we did slice through this negative gamma, but we're now down with it. The negative gamma zone, we're done. It's right here. So of course this could change. Like this is all based on real-time trades and we're starting to see some flow alerts. But my message right now is if you caught this short, ride it. Get your stop to break even. It's a freebie ride. You don't know how it's going to be. That's what I'm trying to pitch to you is don't predict and be like, no, it has to bounce right here. Maybe it does, maybe it doesn't. Like no one could have predicted this. Like maybe you did, maybe you didn't, but 50-50 shot. If you somehow caught this breakdown, massive congrats to you. Just let it ride, man. Get your stop to break even, take all your risk off the table, and you like it could turn here. Great. If it starts to turn, take your money. If it keeps going, great. Even more and more money. So that's the idea of like why predicting is just it's a waste of your time. It's a waste of your effort. You don't know what the next bar is going to be.
Connection lost.
And I'm losing connections again. Jesus. I think I'm already back though. Look at that VWAP retest fail. That was probably a trade. If you took the short at 10.02, how many of you took this right here? So we vomited below VWAP. We popped back up. The pop failed. You could go short at 25 and your risk was 45. You're risking 20 points on the V. Did any of you take that? That was actually probably thus far on the day. That was probably the trade of the day right here. And granted, obviously it worked out well, but not even knowing that. I'm saying if I just show you this, we're going down, down, down. We pop, it starts to fail. You go short, you have well-defined risk. If it goes in your favor, you move your stop to break even, and it's a freebie trade. You're short at 325, and we're already trading at 178. That's an amazing trade right there. And obviously it played out, but I'm saying it's a good trading decision because you're just playing the VWAP failure. It's phenomenal. Absolutely phenomenal. If you were wrong, you took less than 20 points of risk. If you were wrong, it was a survivable hit. And in this 50-50 scenario, you ended up being greatly right, which means in these 50-50 opportunities, this one success has paid off for many of those times that you're wrong. This is the idea of keeping your risk small when it goes in your favor, stop to break even, and then you just ride it. This is just a game of fishing. You are fishing time and time and time again. Say no more. I learned a long time ago to put my money behind the trader with the most fabulous goggles, so here I am. That's the real success in trading. Wow, we full tripped it. We went from the extended hours, the overnight trading session high, to the overnight trading session low. And we did that from market open to now, 10:10. So it took about 40 minutes, but we full tripped it from 25,452 all the way down to 25,145. 300 points. Wow, dude. What a rip that was. What a ripper. You think they're going to full trip it back up? You think what's the votes? How many of you think we're just going to V-shape or Nike swoosh recovery it up? All right, type 1 in chat if you think this is going to be either a V-shape or a Nike swoosh, or type 2 in chat if you think it's a fail and then we puke. 1 for some sort of like clear recovery, 2 for some sort of like, no, actually it's about to get worse. What's everyone's votes? I want to see across the board where the Goonie community's at. We did overshoot this. Look at the Russell. Look at that Russell. 1-1, 2-2-2-2, 3. JVIC is coming in. I think I am seeing a bit more. Okay, the Bulls were the first to respond, but now I'm seeing more Bears come in. I am interesting. The people who were quick to react to the keyboard were the Bulls. You think we'll get another Vanna rally this week with today's move it? It depends on how many people get puts. And then after that, not only do you have to look at the put open interest, but then the market has to recover and vol has to get crushed. Once again, this prediction, it's fucking stupid. Predicting the market is such a fucking waste of time. Just look at the data. I don't know what to say besides just look at it. Did people buy puts? Is the market turning around? Does volatility get crushed? All right, great. You might have a Vanna rally. If people aren't getting puts, if the market doesn't turn around, if vol isn't getting crushed, you're not having a Vanna rally. Show us the data. Go right here. Are people buying puts? Yeah, looks like they're buying a little bit of puts. Look at the data. Nope, not buying many puts on the Mag 7. The data is more clean at the end of the day when you see like the net result, because when you are buying puts, you might be buying to open, you might be buying to close. And for a Vanna rally, you specifically want them to buy to open. They need to be live. So you want people buying puts with obviously the open interest expanding. People could theoretically buy puts, as in buying them back and closing out on the open interest. So for a Vanna rally, you would actually uniquely want the opposite. You want the people to buy puts like we're kind of seeing right here, but you also want the open interest to be going up. So people are buying puts. Then the question is open interest going up? Ooh, I kind of missed that one. Well, I would have been stopped out, I suppose. Very interesting spot gamma lately for data. Dude, spot gamma is without a doubt the best options analytics tool. I know that people use other ones. What are the popular ones? Unusual Whales, Cheddar Flow. I'm promising you, I've bought the subscriptions to all of them. And the best is by far spot gamma. Like it's second to none with how good that data is. Truly. Okay, we don't have the IB yet because we haven't been through the first full hour. Remember, the IB is from 9:30 to 10:30. It's the high and the low of the first trading hour of the day. Do I want to take this short? Yes or no on the short at 58? We had a little bit of a pop. I missed this entry here at 73. I would have been knocked out anyway.
Order submitted.
Come on, buddy. 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 We did just make a new low, but once again, hang on. Let me look at some of these key levels. Okay, I see people trying to buy at 27.50 on IB here. Let's see. Is that going to be enough aggression? Volatility is picking up. These ranges are picking up. It's getting quite skippy. It's getting quite skippy. I don't want to be on the 100 tick. It's just moving too quickly here. Oh, brother. Oh, brother, oh, brother, oh, mother, oh, brother. Oh, mother, oh, brother.
Order submitted.
Dude, my orders are getting messed up again. Shit. No, not. We're slow. Decrease price. All right. We're back to where we should be. We're having a little bit of technical issues today, but we're going to figure it out. Everything will be A-okay. Everything, folks, as long as we don't freak out, it's going to be fine. As long as we don't freak out, it will be fine. Oh, brother. All right, de-risking a little bit. I'm putting my fill at 101 just in case people front run it at 100. I do see some people down here at 100, which is why I'm trying to front run it a little bit. Some people are coming in at 115. Let's see. How can I do this in the least risk-adverse way possible? Well, the first way you do that is moving your stop on one of them to break even. So the very first short I took, that stop is already break even. So I'm only taking on risk on the second trade. Once again, I went short. I took another short. The stop on the very first one is already break even, as in it's a free play. It is alert, 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 alert. Your boy has gone riskless on trade number 1.
Order filled.
And we lock that in. Bada bing, bada boom. All right. And now we are going riskless on trade number 2. Riskless on trade number 2. And this is how you make money back, folks. This is how you make money back. Obviously, there's probably logical questions of, Matt, where's this going to go? I have no idea. I could tell you if it hits 10, I'm happy to take those profits. All I could tell you is I'm taking on no risk. My stop's at break even. Either I'm making money or I'm break even, whatever. I locked in money. We're at 20. There might be a reversion there. I am attempting to pay attention to that. We did break this low. Let's go to the 30. Oops, I did not mean to do that. My apologies. I don't want that. What is this low? What is this low? What is this low? All right, 24955. All right, so we are bouncing off the low, this little dip that we saw at 950 yesterday right here. Maybe I can make this a little bit. You see how we wicked right there? Am I about to get tagged out? I might, but it looks like some buyers stepped in like perfectly right there. And then if it pukes from there, I guess 25,000 flat, maybe 24,950, something like that. I guess I could have taken another short because that one's already riskless. I don't care about it. That stop's already there. It's not costing me any money. It's either going to be break even or it's going to make me money. I know a lot of people don't trade that way. And I guess all I can say to that is most traders end up losing money. So why would I want to trade like most other people? I've just developed my own system that works for me. Maybe it works for you. Maybe it doesn't. I don't know what to tell you. I don't know what to tell you. I just want to take as many riskless trades as I possibly can. All right, there are buyers at 95.
Order submitted.
I am obviously the second one right here. I entered it at 96. The risk is all the way up here. So I am taking risk, about 30 points of risk. The other one is remaining at break even. The very first one, the stops at break even, that one will not be costing me money. So the second one is the one that I would prefer to move down and take on less risk with. So this one, I don't need to move it. Stops at break even. I did already move the profit target to 60 on this one just because I was trying to catch this flush from 96 down to 60. Come on, come on, come on, come on, come on, come on, come on. Come on, Hannah Montana. Come on, Hannah Montana. Come on, Hannah Montana. All right, moving the risk on the second one. Hopefully it doesn't recapture 100. Come on, Hannah Montana. I guess I can move it to break even. Why take on risk? Okay. Both are riskless now. Both are at break even. Whatever. I'm either making money or I'm break even. Shit. It's coming for break even.
Filled.
Wow. That was really quick. The other one's still in. I did this one. We're trying to catch a fish over here and we're looking pretty good. So I took a stab at this one, got knocked out for break even. Whatever. I think it was a worthwhile shot. And I actually still think it goes. If I kept the risk at like 105, wherever it was, I would have never got knocked. But that was more just because of a poor entry on my part. Is this going to get clocked again? Hang on. Let's look at order flow. Let's double check. Let's check our rear view. Oh, that's getting crushed. That's also getting crushed. Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. All right, they're trying to take out people at 70.
Order submitted.
Damn, that would have almost hit that initial 60 target. Wait, what am I doing? All right. Things are getting a little spicy today, folks. They're in fact getting a little spicy. Little spicy, a little spicy. A little pizzazz, if you will. A little pizzazz. All right, remember, this one up here is break even. That's fine. That was a short from earlier. I'm trying to layer in new shorts that I'm trying to give basically like no risk to. I just got stopped out on that one. That one sucks, but once again, stopped out at break even. So it's just, how much can I grow them? How much can I grow them? I need to leave this above 100. Unfortunately, I am going to have to take on a little bit risk. It's a little bit more risk than I would like to take on. Hang on. Let me look at some of these key areas. 35. What is that low? 30. Is it going to come for this one? Let's see. Let's see how this plays out. Mom? Could have probably taken another short there. I would have done that if I had the second one already to break even, which not the best entry. So just got to be reasonable. But generally, I want to trade one. The reason I'm in two right now is because the stop on the first one is already break even. I know I'm like reiterating that point, but it's because it's that important of a point. I'm only trying to trade one contract, and I can trade additionals when I'm taking on no risk on the original. I'm taking on no risk. I was short at 43. The stop's at 43. Great, no risk. I'm taking risk on this one, which is about to get clocked. Oh, is it going to rip through it?
Order filled.
Yeah. I was thinking about moving it up to 27. I just didn't want to take on that much risk. We'll see. 90, 91 right here. Let's see. It's not that choppy. Intraday, we've been kind of trending down. I don't know what time frame you're looking at, but I think it's hard to agree that it's choppy.
Order submitted.
What is the risk that this is taking? Why is it so close when I'm getting in? That one's going to get fucking knocked out.
Order filled.
Yeah. 97. What is this low? This low is 94. If it breaks 94, I'm taking another stab at it. Obviously, the risk is right up here. I just don't... Hang on. Maybe I can edit. That doesn't make sense.
Order submitted.
This one's still at break even. I told you exactly where I was taking the short. I took that exact short there. I'm trying to do it obviously with minimal risk. I just need a failure at 58. At this point, it is 1030. So this is officially the initial balance low at 58. So 25,058. I'm expecting people to react to that because it is the IB low. And generally on the first test of it, you do see some of a reversion. So let's wait and see how that one plays out. But this red dash line in the middle of your screen, that is the IB low, the initial balance low. So that's, I'm watching this. It's the first hour of the day, regular trading hours, 9:30 to 10:30. There are interesting statistics surrounding this level. So that's the test that I'm waiting for. And then I just have, in case there is a puke there, I have a reach target at 25 and another one at 25,001. But it might be coming for me, unfortunately, here. Let's see. I don't know if it's going to accept or reject 100. It might just slightly overshoot it, knock me out, but whatever. That's life. Come on. Come on, come on, come on, come on, come on, come on, come on. Mag 7 still getting hit. S&P 500 potentially bottoming. Bearish, bearish,
Order
bearish.
filled.
It just knocked me out of that one. I still have the other one, though. We're just doing a layering technique. Layering in, layering out. Scaling in, scaling out. The bounce is a little bit more than I wanted. Fuck. Some buyers are actually legitimately stepping in right now. But I might bail on this other one early. I don't know. I'm going to give it a second. Obviously, the 5-minute, 10-minute, 30-minute bearish. 5-minute, 10-minute, 30-minute bearish. I need to log into Spot Gamma. I need to log into Spot Gamma. Let me reload that. Here is the hero flow. Here's the hero flow. Mag 7. Yeah, that might have been the bottom 1 hour in. Let's see. It could be a dead cat. Let's give it a second. That's why my stop's at break even, because I don't want to risk anything. But we are seeing right here at 1025-ish. Some people are starting to step in. So how strong will they be? I don't know. This might be a retest of the low from yesterday and a failure, or it might be that Nike swoosh recovery. That's also totally 100% possible. And because we don't know it, that's why you keep your risk in control. My risk is at break even. That is where exactly where I went short, was at 43.50, which is why I said it there, just to literally take all risk off the table. So if it hits it, no skin off my back. We'll see. It did strongly recover above 100. I kind of care about this level here. And then, like I said, I am looking for a retest of this VWAP at 58. What was that low? That low right there was 97.
Order submitted.
Let's see. Patience. Patience. Patience.
Order submitted.
Let's see. I'm still just short one. I'm waiting to see if there's going to be an actual breakdown. I'm once again watching the IB low, initial balance IB. It is the first hour of regular trading hours, 9:30 to 10. It is the high and the low, and I'm watching the low. The 50% retracement is up here at 260. Hang on, this might be knocking me out pretty soon. We might be getting a change of trend here. What are we doing? What are we doing? Are we going? There are sellers up here at 150. There's actually a good chunk of sellers. Pending sell orders at 25,150 right here. Once again for NQ. Taking a look at SPX. Buyer stepping in at 20. At that point, I'm kind of surprised we didn't test 900, but it might be a pop back up to this zone between like 35 and 45 and then a failure, or the actual Nike swoosh recovery that we were talking about. I just got knocked out at break even. Okay, so that pulled all the orders, knocked out at break even on that initial one. And I don't mind it just because what I'm seeing over here is actually a decent amount of buyers are actually stepping up. 1027. Clearly, we were puking till then. You never know when trends switch, which is why you want that stop to break even. Right here, 1025, same thing. So we puked pretty hard. This might be the bottom of the day. We'll see. Or it could be the dead cat into this zone, somewhere between 37 and 50. We get there and fail. You just don't know. Obviously, if this trend continues and we see that aggressive buying, yeah, we could easily make a full recovery. But right now, the 5 to 10, it is kind of messed up. I wish I traded with a little bit smaller size. How much do I really want to risk that? Up into here. The Russell got messed up. It was so strong. And then 2 minutes into the day. All right. It looks like we're going for this retest, the potential red to green, and also testing the low from yesterday on the spine of the Q. So that's going to be the interesting test right here, coming up at 37. The closing value is 42. Obviously, gamma level at 50. We slightly overshot 20. We got as low as 12, and now we've already bounced 20 points. So we're about to find out, dead cat or not. Dead cat, when does your VWAP start? At market open. Which is 6 p.m. the calendar day before. Come on, Flying V. It might be. I'm happy to play either in this circumstance. I really am. If we recover, great. I want to get in on that trend. If we puke from here, if this is a dead count, great. I want to get in on that trend. I don't really care which way. I just want a trend. That is all I really give a shit about, is can we catch a trend, which this might be the dead cat. Watching. Here's the flow. See right there, SPX, it was recovering, got smashed. All right, we're going to find out. Is this our first higher low right here that we're recreating, or is it just a lower high that pukes? Only time will tell. Only time will tell. Whether you're long or short, I wish you the best of luck. Obviously, the name of the game is just, if you could get your stop to break even, get it to break even, and then pray. Pray for the best result. These blue horizontal lines are just like previous lows from yesterday. Right here, this is the interesting thing going on right now. Right here, what we're seeing, are we seeing the first higher low after the sell-off, or is it just another lower high? Because we didn't really take out this previous high. So in terms of the structure, as in higher highs, lower lows, like that type of a thing, we're just waiting. We're just waiting. It seems like they're trying to make a higher low to test the 1 minute 50 EMA, but it's kind of too early to actually tell. When do you move your stop to break even? Whenever you think it's appropriate. I'm not trading for you. It's how much risk do you want to take on? We all have different personalities. We all have different account sizes. We all have different ways to approach the market. When you move your stop to break even, the chance of that overlapping with when I think it should go to break even versus with other people, it's just wildly different. Someone is saying Vlad's on CNBC. What's the boy from Bulgaria talking about?
Where these models can work autonomously for hours in the background and give you back like a sophisticated piece of software. So I think what you're seeing right now is it's clear that this is going to be a big transformation, and that the companies who are technology companies who can actually adopt this technology are going to leave the incumbents in the dust.
We're not seeing as big of a tailwind, I would think, to some of these businesses yet on earnings. I know you discussed that on the call. We have to wrap up in a second here.
Might have some higher highs and higher lows here.
IPO sentiment. So many of the AI labs and SpaceX have talked about potentially going public this year. We've reported on it. What are you seeing from retail investors?
50% retracement is 261.
Trillions of dollars in issuance
VWAP is 279. This would be your first target if you're trying to catch the recovery, between 60 and 80.
And we have an IPO access product, and what we tend to see is when there's a lot of IPOs that are interesting to retail,
I guess we need to break this.
The net deposits actually start coming in because people want to bring in new money to get exposure to these IPOs. So if it's a big IPO year, and there's some names that have already publicly said that they are making preparations, I think that's a
the
great
1 minute
tailwind
is
to
testing
our
to go
business
bullish,
into
like
the
pretty
equity
much
markets
now.
in general.
Quick last question: billionaire tax. If that gets passed, are you leaving California?
Well, my intent is not to leave California. I don't agree with it. So
the old billionaire tax.
I think that it's important for California to be the center of startups and founders. If you think about this tax, really a founder's tax.
We are testing the low and the close from yesterday.
Old legacy dynasty money in California. It's people that have come, a lot of them with nothing, and built businesses that California benefits from.
Yeah.
You're already seeing people leaving the state. So I think there's a big question mark about whether this thing just sort of like completely backfires, and we don't want to end up as a state in a situation where we're killing the golden goose, right? We want to
50% retracement is 62. So that's what I'm saying, between 60 and 80.
You obviously built Robinhood here as well. Unfortunately, we're out of time, Vlad. It's so good to see you. Thanks so much for being here. And guys, I will send it back to you in the studio.
Okay, not joining the parade of billionaires that are exiting. Not yet.
California has to be one of the most idiotic run states
Chief
possible.
Economist Jan Hatzius with us to break down the numbers.
I don't understand why the people of California continually elect the dumbest people they can possibly think of. It's like seemingly a weird game for them of like, who is the dumbest person possible? Oh, cool. Let's like give that person more power. That's seemingly how the government of California is run, of like the dumbest people. I just don't get it. Like, I don't know if we have people in California in chat right now, but I would love to get your thoughts on like, what is that the name of the game at the ballot box of like, okay, who do you think is the dumbest person? And then everyone just picks that and like, oh crap, we gave that guy even more power. Another political rant? It's not really a rant. I would say it's just me stating kind of the painfully obvious. Like, by many objective measures, California is the worst run state. It's not really like subjective. It's objective. Like, why do you think California has the biggest exodus? Oh, is this going? Hang on. Enhance. And it sucks because it's a beautiful state. It really is. Like, there's a lot of good things in California. It's just a bummer that the voting is always so fucking atrocious. I mean, if Gavin Newsom isn't a fucking lizard person, I don't know who is. Nancy Pelosi is one of the most corrupt politicians like ever. She's like speed running the highest level of corruption. And then yet you guys have allowed them to be career politicians. You just keep voting for them. I'm not even saying like whatever. If you want to vote Democratic, go vote it, but pick a better one. There has to be more moral Democrats in California than who is currently in power. It's not like a left or right thing. Whatever. If you like the left, you like the left, whatever. That's fine. Just pick someone that isn't like completely two-faced. Oh, okay. We are not only battling it out on the 1 minute to try to go back bullish, but it happens to be right at the closing value, right at the low value on the SPY and the Q. So this is very interesting. Can we recover above this? Or do we get smashed? If we do recover, how's flow looking? Mag 7's flat. S&P 500 is getting jagged, but it is picking up since 1025. It is picking up. Decisions. That's all pretty fucked up.
Order submitted.
All right, I'll take a stab at it. One contract long. Maybe this is a VWAP retest play. We'll see. Taking a long position, I am trying to give it minimal risk because the 5 minute and 10 minute is bearish. The 5 minute and 10 minute is bearish. But if you go over to the 1 minute, it's testing right here. This might be a trend reversal. So if I'm wrong, I'm going to get out very, very quickly just because the other timeframes aren't looking so hot. Mag 7's questionable. S&P, it's trying to recover, but you just don't know. It's a little bit of conflicting. Just in case this is the earliest sign of recovery, I took the position. If I'm wrong, I'll get out quickly. And if I'm right, great. I get to ride it all the way back up to 60. I get to ride it all the way back up to 75, whether you're looking at the VWAP retest, whether you're looking at the IB 50% retracement. That would be my first obvious target, which is just below 100-point return. And I do want to minimize this risk even more. I would love to get the risk to 74. Fuck. Hang on. All right. I can't have it any worse than 49 right here. I'm watching this low at 1043. So clearly a succession of higher highs and higher lows. And as long as that holds, we're looking decent. But just to point out to you the battle that is currently going on right here, the 1 minute ran up. Are we actually breaking or no? The 1 minute ran up. Are we actually breaking or no? Like, you just don't know. And in fact, if it fails here, that's a good short. So I'm just putting this out as a key level. Which way will it break? I have no idea. I'm just saying that whichever way it does break, you're probably going to make good money. So don't come in so heavy with your bias of, oh, it has to be bullish. Oh, it has to be bearish. Watch this zone and then just pay attention to the break of it and see if you can play the break with minimal risk. I'm taking a stab at the long side first just because I saw the S&P 500 recovering a bit, but if it ends up failing, yeah, I'll just flip it short because whatever it is, I just like this as a zone. That's like, I guess, the key point I'm trying to get across. And actually, it might knock me out. Maybe. I don't know. We're just waiting. We popped up. Now we're consolidating right at equilibrium. And if I am wrong, I will happily go short with it. I'm not married to the bearish side or the bullish side on this. I just want to play whatever the trend's going to be. And I think from this break, we'll have a good trend. I could see the NQ coming all the way back up. Like I said, 70-ish if we pop. And if we break down, I'm looking back at the intraday low. Like, I like that amount of movement. That's a good trend. The name of the game is, can you just get in on the trend with, like I said, minimal risk? Minimal risk. And we're actually just stuck. Mag 7's not looking so good. SPY was popping up. Now it might be turning. That might screw me over. This is exactly why I only did one contract, just because the trend is kind of questionable. The shortest time period, the like 100 tick, 500 tick, 30 second, 1 minute, 3 minute, it's showing some life, but any time frame larger than that is still showing a bit of bearishness. So just due to, I'm about to get knocked here. I'm really close to getting knocked. It would need to turn like now. It's not going to turn. My stop is right at 49. It's about to knock me out.
Order filled.
Yep, knocked me out. Oh, failure right here. We fell out of the box. Like I said, I'm cutting it quick.
Order submitted. Order submitted.
What's the intraday low? What is the intraday low is like 57-ish. Yeah, I mean, right there, we ran right back up, got smacked. Fuck, is this going to be a little bit of a fake out? Time will tell. Time will tell, time will tell, time will tell. Mag 7 getting hit. I was attempting at first to play the recovery. The recovery and options stopped before price did. Continue to get hit. S&P 500 actually kind of perfectly in lockstep. I try to play that recovery. Nope, is getting hit right now. So let's wait. It might be dead caddy right here. We undershot that recent high. We ran right up to the low. We ran right up to the close. We ran right up to these key areas and started to get hit. How the depth of this pullback is going to be telling. Now, 3 options here. We either undershoot the low of the day, we overshoot it, or we perfectly tie it. So if we undershoot it, as in don't go as deep, that's a higher low. Oh, okay, maybe the trend is changing.
Submitted.
Well, I just got smacked. My wrist got hit. It might actually be a bit of a higher low here. It might. Look at that. Like I was saying, okay, case one of the depth of the pullback matters. You either undershoot it, overshoot it, or you tie it. And we might be undershooting. You would have confidence of this if you get above the 1045, the 1040-ish high. We're basically trying to see, is this trend continuing, or are we about to witness a trend reversal? The Russell's doing nothing. It's consolidating. Tesla's catching a bid right there. ADX says it's going up. ADX is a backwards looking indicator. What do you mean it says it's going up? It says it's been going up based on the advance and decline movement. But it is not a forward looking mechanism. That's not how that indicator works. And also it's only going up probably from like 1025 till now. Net on the day, it is very greatly down. I have a suspicion that you might need to learn how to use ADX. It works very well. If it did work that well, wouldn't someone just automate it and just use ADX all the time and make unlimited money? I hate that when people like really believe their indicator is the best indicator, because if it was, it would just be data mined. Do you know how many people like me and hedge funds would just run bots all the time using it? You don't know everything. I'm not saying I know everything, but I'm saying apply common sense to it. You could come up with a new random fucking indicator right now and be like, it's the best thing ever. And I would still say the same thing. I happen to know a lot about ADX because I've used it a lot. But even if I didn't, there is no standalone indicator that is the end all be all best. And people who think that are simpletons. They're stupid. They're very simple minded. It's one indicator. It's like any tool. Like you can't sit there as a carpenter and be like, this saw is the best tool ever. No, sometimes you need to hammer something. Sometimes you need whatever to tape shit. You get my point. And that's people time and time again like to say, no, my tool is the best. No. The best traders use a concert of tools and they understand the limitations of each and try to put the puzzle pieces together. But that's such a stupid fucking argument. Such a stupid argument. Rage baiting? I don't know. Like, it does seem like there's a weird correlation between the dumbest people and attempting to, like, rage bait there. YouTube Warrior? Isn't that literally you? Like, aren't you trying to be, like, ES going back to VWAP more on... When did I say it's not going back to... I said it could easily go back to VWAP. When was I ever against that? What? What's so funny about this? It works all the time. Okay, where's your hedge fund? If it works all the time and you're such a good trader, post your brokerage statements on Twitter. Post it on Facebook. Open up your hedge fund. Show us your Lamborghini. Show us your mansion. Like, this is what's so funny about it, is people are so steadfast in their thoughts, and then yet they never have the results to prove it. I guarantee you are not a profitable trader. If we looked at your career of trading, I guarantee you are not a profitable trader. And the reason I know that is nothing to do with ADX. It's because people who are so sure in this game always end up losing money. The best people in trading understand the uncertainty of these things and saying, like, yeah, maybe it happens, maybe it doesn't. But this overconfidence is like, nope, this is right and it has to work. It's the dumbest shit ever. I actually guarantee you are a net losing trader. And what's so weird to me is that retail traders, in their mind, that never clicks as being a weird thing. Like, you're so confident in being right, but then yet you never have the results for being right. Like, it just doesn't make sense. So, made 40K last week. Answer the question. See that? You love that? Made 40K last week. Okay. You could pick a person who's never traded before and say open or long at close, or at open, like long or short at open, and they could make 40K. This is how I know you're actually fucking retarded, is because you're trying to point out the success of 1 week. Oh, cool. Oh, awesome. That means you're a good trader because you had success for 1 week. Oh, all hail the fucking Lord of Trading here. You had one good trading week? Wow. You must be the best ever. You must be so incredibly good at this. Dude, how fucking retarded are people? Like, this is why we need to bring bullying back. The new age, like, millennial Karen mom who's against bullying. This is what happens when we don't allow bullying, is there are people who've done nothing in their life. They've achieved nothing. They are permanently glued to watching everyone else achieve something on the bleachers. And here we go. We are just stuck with retards thinking that they're not retards because we're not allowed to call them out. Like, all these schools have rules against bullying. No, dude, bullying is good. It puts frameworks on society. Can you overdo it? Of course you can overdo it. But also, you can severely underdo it. And that's exactly where we are at in society, because we actually let people like this better than you. I guarantee you are not. If you think you're a better trader than me, write a contract. I'll sign a contract. Pick a time frame. Pick the results. Let's compare it. I'll sign whatever contract you want. It's up to you. I am not hard to reach out to. Send the contract, sign it away, you little pussy. I'm better than you. It's funny because literally no one knows who you are. No, literally no one knows who you are. 40K last week, that's good. Yeah, except he's not telling you that he blew 100K the week before. That's what I'm saying, dude. People point out singular points of success or singular points of failure, and that would be as fucking stupid as taking the worst basketball player ever and they just lob up a ball and they make a three-pointer and then, look, I made a three-pointer. And then you point out someone like LeBron or Jordan or Kobe and you point out one time they missed and you're like, look, they missed, they must suck. That's how fucking stupid people sound in trading, doing the exact same thing. Imagine picking out one losing trade from Warren Buffett and saying, look, he lost, he must suck. Or imagine pointing out one winning trade from this guy and be like, wow, he must be good. People just don't get it. They're so susceptible for falling for the easiest bullshit ever. The easiest. And I just don't get it. This is why at all levels of education, we have to have some level of critical thought, and we need to bring back the bullying of stupid people. Stupid people, we either need to bully them to be more intelligent, or we, at minimum, we need to bully them into just like shutting up until they can like actually offer something competent to the conversation. Those are the two options. Education needs to include critical thought, which we're missing that, obviously, and we need to bring back reasonable amounts of bullying. We have to. Like, there's too many people who don't know how to think, and there's too many people who don't know how to think who are more than willing to open their mouth, and it's a sad state of affairs. It really is. Unfortunately, it's usually the stupid people bullying the smart people. Well, if they're smart enough, they'll figure out a way from under it. Matt, why do you tilt every time everyone has a different opinion? It's not an opinion. See, that's what's crazy about it. Like, you're all so fucking retarded. Imagine saying someone comes in and they say the sun is cold and I say it's hot. And then I'm like, you're fucking stupid for thinking the sun is cold. And you're like, wow, you're getting tilted because that is a different opinion. There are things in this world that are objective and there are things that are subjective. That's it. Like, how fucking stupid can people be? It's not an opinion. This dipshit in here, ADX is the end all be all. I trade on it all the time. I'm so good. And you know what's missing? His profits, his hedge fund, any measurable amounts of success. He points out one singular fucking trade and thinks, oh, look, I'm so good because I trade ADX. And yet, you know how he's like, not good? Because he's trying in here endlessly to prove he's good. No good trader needs to convince other traders that they're good. And then yet we have his like little fucking friend in here. It's an opinion. It's like an opinion, man. It's like an opinion. Oh, Jesus. Looky, back to VWAP. Isn't that what I actually said was going to happen? Are you trying to like point out how I was right and you were wrong? Bro, you're disrespecting your community. Ooh, that's a tough one because generally in my community, we don't let dipshits like yourself. So that's awkward. I mean, are you really in the community if you're saying dumb fucking things? Generally for this community, we have a minimum line of entry, and it's actually just a minimum basic competency and critical thought and not saying dumb fucking things like that. So do the people actually in the community. They're like, this makes sense because we don't want to put up with actual fucking rejects. And then there's people like you who I assume need to like, call your mom from your safe place. You could go talk to your friend about ADX and be like, it's so good. We're going to open our hedge fund tomorrow. We're going to open up our hedge fund tomorrow about this. It is not worth my effort putting up with retards. I'd be like, well, that's just not nice. Some people aren't going to like what you're going to have to say. Good. By intent. I don't need to deal with you. The rest of the community doesn't need to deal with you. It's like these fucking dimwits in this world thinking they're going to be successful traders. It's astounding. And like to the rest of us who are actually going to do this, we don't want to waste time with you. Folks, when you entered into this chat, there was no sign that said all are welcome. That did not exist. I checked it. One time someone tried to put up that sign and the team and we quickly ripped it away. This is not an all are welcome type of space. Like, not at all. Please don't make that a misstep. Don't fall for that pitfall thinking all are welcome here. It's just simply not true. There's people in here who have a real shot and are trying to actually do something in the market. And you have people who are, I assume their mom drank too much alcohol when they were pregnant, or maybe they got dropped on a head. I don't know. Initial indications do seem to point to fetal alcohol syndrome. I don't know what it is, though. I'm not a doctor. No, don't make that misstep. That's crazy. That's absolutely crazy. Be careful. Be careful. Look at that. We hit VWAP on NQ 70. Jesus. So ungrateful. No, that's not ungrateful. I think you might need to learn what ungrateful is. Are you saying I should be respectful of your stupid comment? That's not the definition of grateful. I guess you could say I'm being honest by calling you stupid for saying a stupid fucking comment. So it would make more sense for you to be so honest. But ungrateful, what? Earthkeeper, what have you ever done for me? But by that definition, you're arguing that there's something I should be grateful for. What is it, dude? What? Seriously, like, what's one thing you've ever done to make my life even like a modicum better? Like, did you ever, did you send a funny meme? Did you? What's the smallest measure of thing that I should be grateful for? It's just crickets. We're not going to get an answer. I could tell you, Earthkeeper hasn't done shit for me. Hasn't done shit for me. Thanks to Earthkeeper, now he has a commercial as penance. Oh man, dude, this is the issue with like the participation trophy culture that all these like Karen moms are creating. It's not good. It's not good. Earthkeeper has a window licking job. Very well, might. Very, very well, Mike. Polite insult of the day, Matt, my dude. Your decision making is so bold it deserves its own motivational poster titled "Boldly Going Nowhere Since Whatever Year You Started Streaming." Hell yeah. This is what happens when I make all of my money from trading and not from content. Like, people think I have to care about content when I don't. You're letting this guy bother you. It's not bothering. I guess I'm bothered by people's stupidity, which probably should talk to a therapist about that, of why stupid people do bother me so incredibly much. Like, I don't think that's necessarily healthy, but it's not bothersome in the way that like you would traditionally think about it. Like, obviously people's stupidity, like, I find frustrating, but it's more so of frustrating and then the confidence that they're right. There are, at any given point, you have to learn something. So whether we're here about the markets, carpentry, yeah, there's things you don't know, and then you learn the thing and you move on with your life. So I get that. It's not a prerequisite to know everything coming into here. In fact, there's many, many new people. It's more of we need a willingness to be like, okay, like what's true, what's not true, how can we test it? And it's more of the willingness to understand that there's a lot of uncertainty, there's a lot of things to learn, and we're kind of like in this together. There are many people in chat who've taught me a phenomenal amount of things, and I'm hoping that I've taught you guys a lot of things. But what's not acceptable is all these people who are like, nope, this is the one perfect thing, and you gotta believe me. And you're like, okay, that's an interesting concept. I might be open to like understanding it. So if you're so good at it, and then you start to ask the questions, where's your success? Where's your money? Like, you're so steadfast in being right, and then you ask them, where are the measures of your success? And they're like, I actually don't have it. That's where it's frustrating. I get it. Some people just don't, whatever. You don't know what you don't know. There's many things in this world that I don't know, even specifically about trading. But you have to train yourself to have the ability to understand that, like, okay, if you don't know something, you take as much in as you can, you test it out, you see if it's right, and you accept the uncertainty of the situation. But one of the worst personality traits in this game, and also not in trading, but in just life, is the certainty that you're right on everything. It's so fucking stupid. It's so dumb. And then you have these like dweeby ass little commenters like, I'm so successful at trading. I'm so good. This is the indicator I use. Great. Go start your own hedge fund. Go start your own channel. If you can do it better than me, prove it. I mean, you're not showing any success in any aspect of life. So like, it's one thing to cry how good you are, but wouldn't it make more sense in your life to go like out and actually do it? Like, I just don't understand it. What is going on in the market? Nothing. Mag 7 went flat. SPY's actually tilting down. This might be cracking again. See how the 1 minute popped and it failed, and it's actually starting to get crushed right here as well. It's actually, this little pop is starting to fail. You would want, I mean, the telling thing is this recent low. if it takes this 690.26 level out, we're going back to the intraday low, I would say. That's the level I would be personally looking for. But for right now, we had lower highs and lower lows, and now we have higher highs and higher lows. And that structure will obviously be broken if we take out this low that we saw at 1050. So we roughly got a 50% bounce, not even. We did go up to VWAP, and it just got severely rejected. Now, we might be continuing with this trend because obviously we haven't broken that low yet. It might just be another higher low when we continue this trip higher. But for right now, we see a larger bearish trend followed at this moment by a smaller bullish trend. And we're waiting to see, will this bullish trend continue? I.e., will the low be above the recent low? And will we take out the recent high? Right now, it's not looking so good. Mag 7's flat while the SPY's getting hit. Looking at the SPY, we're maybe buyers come in at that low from yesterday. Right where we are, maybe this 1 minute can save itself. It might get a bit interesting above 940. But in terms of the high and low to watch, on SPX, you're watching 46 and you're watching 23. Depending on the time frame you care about, the 1 minute is trying to hold bullish. 10 minute is bearish. 5 minute is bearish. 30 minute is bearish. 1 minute's trying to hold bullish. 5 minute is bearish. Actually, a perfect rejection. 10 minute, perfect rejection. 30 minute, perfect rejection. So there's conflicting things. I would say for day traders and scalp traders, there is conflicting information, but most of it is favoring the bear camp, at least currently. So as much as people in chat might be saying stupid shit like full recovery, I trust in ADX. Yeah, you might be right, but the other data is not suggesting that at this moment in time. It might become true, but if you were to bet your life savings on that every single time you see this exact setup, it would probably only take 2 to 3 times before you lose your entire life savings. And the real dagger here is the S&P 500 options flow is not recovering, and neither is the Mag 7. This bearish. Right now, momentum's just bearish. If things improve, if we can take out this 11 to 1102 high, okay, it gets interesting. That is at the point that all of a sudden the 5 minutes pushing bullish, the 10 minutes pushing bullish. That might be that change you need. But for right now, we're like just in this awkward holding pattern. And remember, all these indicators know the extent of how far they can go. Most indicators in the market are backward looking. They're computed off data that's already happened. So if you look at MACD, RSI, ADX, all of them, the computation is from something that's happened. As in, it's not forward-looking. It's not predicting what's about to happen. It's a computational measure on what's already happened. And it's at a certain point of, like, do you think previous development is actually indicative of what's about to happen? So you have to understand the extent of where this will go. Very, very careful with that. Dude, ADX, like, this is... as stupid as these motherfuckers in the AMC GME days, dude. These stocks would be getting hit by gigantic percentages, and then they would point out the ADX. They'd look at like OBV. They would look at the silliest things and be like, this has to mean this. And it's silly people like this that I'll give you the odds right here. The chance of the pop, 50%. The chance of the drop, 50%. I'm not saying one is definitively right or wrong, but that's because the best traders live in that world of uncertainty. As soon as you are steadfast, that's when you end up over betting, not respecting your risk, and it's only a matter of time before you blow out. At any given point, your base assumption should be 50-50. And as soon as you train your mind to get better at living in that uncertainty, the better off you're going to be. The far, far better off you're going to be. So obviously take that with you moving forward. Before you go, if you want to trade with me, GooneyTrading.com, Apex 80% off with code Goonie and 80% off on Spot Gamma if you want this real-time options analysis. I would say things are choppy. Maybe we're getting a bit of a recovery. The 1 minute is showing recovery. 5 and 10 are showing uncertainty. 30 and 4 hour are showing uncertainty. Yeah, we're just stuck waiting. You have to just wait and see when trends actually develop. Remember, it is okay to not trade. That is an acceptable thing. Without a doubt, you can do that if you so choose. Any hoozle, that's what I have for you. Remember, code Goonie across the board will get you what you need. I'm going to go hang out in the Discord, waiting to see if Piper either does or doesn't fire. And I will catch you guys on the Flippity Flip update video tonight. Today's Wednesday. And then streaming once again, 9 a.m. tomorrow morning. I hope to see you there. Remember, accept the uncertainty. Never be certain. That is a silly thing to do. The only thing you should be certain in is your risk management. Be certain you will follow your risk management and you will survive this game of trading. That's the only thing to be certain in. If you're certain in what price is about to do, well, you're going to be right half the time and wrong the other half of the time. It's literally just how this game goes. So please accept that. That's what I have for you. I'll catch you guys in the Discord. Peace.